Today, I had the great honor of having a conversation with Mark Meldrum, who's probably the most well known name in the CFA prep provider space. He's been in business since I think 2016 and has really taken the world by storm. And now thousands of people use his lectures to study for each of the three levels of the CFA exam. And he had some really interesting thoughts and opinions that he shared with me. So stick around and I hope you enjoy. We were looking at buying houses and it just seems like not a great time with mortgage rates are around 7% and the median home price is I think near the highest it's ever been. So, but who's to say whether it's going to, it could stay like that for a long time.
Yeah, I think if you go back to mid 80s, mid 90s, mortgage rates were significantly higher. You
Yeah.
were eight and a half, nine on a mortgage.
Mhm.
Now housing prices were lower, but you have to look at housing prices, the median housing price divided by the median income to get an idea of what the affordability was, because the interest rate was high, right? So
Yeah.
the interest rate is lower now. The mortgage rate is lower, even though it's higher than it was for the last 10 years. But median incomes over the last couple of years have increased at a rate of 6-7% per year for what is it, two and a half years now, even though home prices have accelerated much more than that. So I think you have a housing shortage both in Canada and the US.
Yeah.
Canada is even worse because we have positive net migration at a significant level. When we're looking at bringing in 2.5 million people over the next 2 years in a population of 38 million.
That's pretty incredible.
Yeah. So to put that in perspective, the US would have to be bringing in 25 million over the next 2 years to equal what Canada's doing.
Because
Now,
our population's about 10 times yours.
9 times more. Yeah,
Yeah.
roughly nine. Yeah.
Mm.
So maybe not, maybe 22.5 million. But
Mhm.
um, when you have a housing shortage already, and Canada has a greater housing shortage, you cannot expect to fight inflation, deficit spend, and have net migration at that level, and everything's just going to work out. One
Yeah.
of those things are going to break significantly, and that's either you have to stop deficit spending, or you have to just say, well, inflation is going to be what inflation is going to be, and we'll keep rates at an elevated level till it's
Hmm.
over, which is where I think that we're going to be for quite some time. If you look at Zillow's rent index, one bedroom, April over March, one bedroom up 0.6% month over month. That's a 7% per year increase. Two bedroom up
And is
0.8%.
that all of a median of Canada or is it
No, that's the
Toronto?
U.S. That's a
Oh, yeah,
median
okay.
of the
Gotcha.
U.S.
Mhm.
Canada, I expected the apartment REITs to, have relatively modest net operating income growth quarter over
Mhm.
quarter because they're all almost fully rented. And if rents were tapering off, I figure where's the growth? They all knocked it out of the park.
It's
I mean, we're
pretty
talking NOI
insane.
growth of 8, 9, 10, 11%. That's,
Yeah.
so.
And I can speak from my own experience as an apartment renter in the Dallas, Texas area, where Dallas is kind of a boom town right now. There's a ton of people moving in. I've stayed in the same apartment unit for about 2 years now. And in the last 2 years, the price has rose about 55%.
Oh,
Yeah, and
wow.
and I'll go look around at other apartments, but you know, it's the same. I can't just go shop around and find one that has the same square footage, and they're all going up that much.
Yeah. The only way to get your rent down is to go from a one bedroom to a two bedroom and split it with someone. But, 600 square feet is not a lot of room to start sharing it with another human being.
Yeah. Oh, that would be a nightmare. That's
Yeah.
why I would never want to live in New York City.
Yeah. Yeah. Well, the 200 square feet is,
You get
is a room in New York City that'll cost you, what, 2,200 a month?
just a walk-in closet at that
Yeah.
point.
Yeah. Yeah. So you're looking for a house. It's more of a, good luck with that. I think new builds are probably where you're going to get the best value because you can then adjust the price. You can set a square footage of, say, let's say 2,200 square feet, and you could say, well, don't finish the basement for me, don't
Hmm.
finish the driveway, I'll finish the drive. You can cut back on all the things that you could just incrementally add on yourself, and
Yeah,
you could probably get in for, I don't know, what is it now, 225, 250 a square foot on the low end. It's still quite significant, and you're going to pay another three for the property. You're still 700,000, 800,000. Well, I don't
totally.
know. I'm thinking Canadian dollars. So
Yeah,
US
which would
dollars, you might be somewhere around 450 to six on a
yeah,
starter home.
that then you're about right on the price ranges in Dallas. But
Yeah,
at least around here, the way that they've been doing the new builds has changed quite a lot. So you used to be able to lock in a new build and they at a certain price. Let's say you buy a house and it's $500,000 and they start building it and takes them like a year and a half to build. And then whenever it's built, you would have that for that $500,000. But the housing prices here rose so substantially that they'd be basically building a house and then giving it to someone for $500,000, but the house is now worth 800,000 because just in the
yeah,
month it took them to build it, the prices rose that much. So now they're basically, or as last I heard, they were making people do basically bidding wars for the new builds. Like, okay, if
mm,
you want a new build, you and 100 other people are going to bid on it when it's finally built.
yeah, yeah. Who's the big builder in your area? That's Texas. DR Horton is big in that area.
Yeah, I think you're right about that.
Yeah. Yeah, mostly in the south. Once you start heading towards California, KB Homes really starts to take over. Yeah. Well, good luck with the home purchase. If you're waiting for relief on mortgage rates, that's not going to happen without a recession.
Yeah, that's
Yeah,
and then so if you want to have a lower mortgage monthly cost, then I guess you're really waiting for mortgage price or sorry, the prices of homes to decline, which who's to say?
they're not. They've actually started ticking back up. Rents are ticking back up, so
Yep.
housing prices are going to tick back up. At least in Canada, they are. The average home price, the median home price, sorry, is up 100 over a little over 100,000 just since the start of the year. Now that's significant. That you're talking about 12, 13% on the median
Mhm.
price, 12, 13% up just since the beginning of the year. Like now you got to add on the rest of the year, right? So you could have another year of 20% price appreciation. At the peak, my house could have gotten 2 million, which is ridiculous because I paid 780 for it. I put maybe 400 into it, but to get 2 million seems rather ridiculous.
That's
I
insane.
think, a couple of months ago, I probably, looking at the market, might have gotten 1.4. Now, I think it's pushing back up 1.6, 1.7.
And that
Just looking at the comparables that are selling in the area and what they have.
so that went up more than 100% since you bought it.
Well, if I hadn't improved it, right? I
Yeah.
mean, there's a full commercial gym, $100,000 gym in the basement. There's
Mhm.
a pool in the backyard that wasn't there before. There's a 10-person hot tub. I don't know 10 people, but I figured just in case 10
You
people
just
show
you
up,
just lay on your back and float.
you can actually just you can starfish in the whole thing. It's fantastic. So just the upgrades, I probably got about 1.2 to 1.3 in the place right now. Um, and yeah, I figure in another by next spring I'd probably be back around the 2 to 2.2 on the property.
So
I
you
live in a
see
city that doesn't
yeah.
allow for the large lots anymore, so everything has to be about density to get affordability. So you can't build on a large lot like I have anymore, which means
Okay.
if you want a large lot, you have no choice but to buy the homes that exist with large lots.
And then try to upgrade on it.
Yeah, well,
And so
I've upgraded the
mhm.
maximum that you can, the maximum coverage the house can have given the lot.
So you're pretty bullish on housing prices in the US and Canada over the
I
next couple of
I
years?
I think housing is a long-term buy in the US, most
Mhm.
definitely, only because you have a structural shortage of housing. And in the last minutes, one of the statements that was made by one of the participants, I think, was quite noticeable, that higher rates does work on demand, but it also works on supply, and especially in housing, because the smaller contractors can't afford to float a property and the development costs for that period of time. They don't have that extra cash sitting around,
Hmm.
whereas the large home builders have tons of cash sitting around and access to probably the best cost of financing that they can get. So when you're a home builder and your cost of financing exceeds the price of a mortgage, right? I mean,
Hmm.
that gets added in, whereas the big home builders are still getting financing below the cost of a mortgage. Just a little above the 10-year because they're so solid, but not a
Hmm.
not the small ones. And you take the whole collection of all the small builders that might build 2, 3 homes a year. You're taking a couple 100,000 homes off the market, because how many of those exist in every city that at this point in time, as far as financing is concerned, are unviable, right? So the higher rates does hit demand, but it hits supply as well. So as long as rates are high, it almost guarantees a continual structural shortage. So the gains accrue to size. So
Hmm.
the big home builders, especially the publicly traded home builders that can float investment grade bond issues and go and bypass the bank. I mean, yeah, I think in this last week I saw Barclays upgrade most of the home graders. UBS upgraded most of the home builders. DHI price targets of 135 to 145, and it's
Wow.
pulled back to 106 after almost a 30% run since the lows, to say that there's another 30% ahead of it over the next year. Uh,
That's amazing,
I
especially
believe it.
considering the growth that they experienced over the last couple of years.
Well, there just is no supply, and the U.S. is rather particular in this. You have 30-year fixed rate mortgages. So somebody that's in a 30-year mortgage at 2.9% is not going to upgrade their house right now or move, because their logic is, I'm going to pay the delta to move to a higher
Hmm.
a higher house. I'll
Doesn't make
sell
any
mine, but
sense.
I'll have to pay more, and then I will lose whatever base mortgage I have. I have to increase it for the next one. Now I'm looking at 6.5% instead of 3%. It's not worth moving. So typically you'd get a supply of houses on the market all the time. Used houses, you're just not getting them. So what's left? The new home builders have almost all the market, because the used home sellers aren't selling them, and the smaller builders are basically out of business.
And the
So
new home
they've
sellers, yeah,
expanded their addressable market on both ends.
and they should be able to charge a huge premium just considering that they're the only game in town is the new builds.
Margins have never been better for the home builders. Now they've contracted over the last couple of quarters, as you expect that they should contract, because they really exploded. To suggest that they'll go back to the historical margins anytime soon, I don't think so. Not unless you have a whole bunch of new entrants come in, not unless you have a whole bunch of regulation leave, and not unless you have mortgage rates drop all at the same time. That's not going to happen in the
Mhm.
next, like, let's say 4 quarters. So I think, it's all green lights on the home builders for at least the next 4 quarters.
Absolutely. And I know you're big into options trading, so do you do any options trading on any sort of real estate assets as the underlying, like
No,
REITs or
not really.
anything like
Just
that?
the home builders. I sell puts on the home builders, and
Hmm.
I'm doing an allocation on the home builders now. So you sell weekly 30 delta puts on them every week, no matter where the price is. On every Friday, you sell a 30 delta put. So you're getting your a moving average on your
Hmm.
puts, right? So the strike price of your puts is following a moving average at 30 delta, which
Hmm.
is for a medium volatility stock might be $3 or $4 below the current price. Well, when I
Hmm.
say $3 to $4, let's say 3 to 4%, because a $20 stock, you wouldn't get a 30 delta at $3 to $4 lower, right? 30 delta is not bad if you want to collect, which means that out of every 10 you sell, you'll get 3 assigned to you, 7 will be premium. So your average cost base continues to be lower and lower as
Okay.
each put expires that doesn't get assigned to you. It's that much free money that you got, that you then sell another put. And if it gets
Mhm.
put to you, well, then you got the premium from that put and all the premiums from all the other puts that it was never assigned to you. So you could be buying a stock $6, $7 lower than what everyone else is buying it simply by having patience. If you're going to buy over a period of time and dollar cost average with the puts, you'll
Mhm.
always get a better price.
And basically that strategy works out as long as there isn't a huge fall in the prices of the home builder stocks.
It works out as long as there is, well, it works out even if there's a huge drop, you'll get allocated because you were going to buy anyways. Where it doesn't
Mhm.
work out is when the underlying keeps just moving higher and
Mm.
higher and higher, that overcomes the premium that you make. In other words,
Oh,
you would have been better off just buying 100 shares,
the
but you sold a
opportunity
put,
cost.
you'd be up $10, but now
Mhm.
you only got $1.20. So that's where if you feel that something is really just going to run, you want to get aggressive with your puts, move them up to zero point 0.5 delta or even zero point 0.7 delta. If you still want to do the puts, then that's where you would put them. Is just get more aggressive if you think that the market's going to run on you. But the home builders had extended way too far. I started selling puts on them, but about a week or two ago, I started getting a little bit nervous, thinking, they're so far above their 200-day moving average. If you look at their chart and you look at the history of their price, they've always retraced to their 200-day moving average, either by going sideways or retreating, a combination of one or the other. That it seemed kind of due because, I was listening to Bloomberg and for a while, almost every single guest on talking about what they like home builders, home builders, home builders. Well,
Oh,
it's a crowded trade now. If
mhm.
everyone's talking about the home builders, word's out.
Yeah.
Words out. Okay, maybe it's time to pull back a bit. Maybe it's time to take profit because everyone's talking about it and look for a better in that might be 10 or 15% lower than, because they were all hitting 52-week highs week after week after week after week. They just kept going higher and higher. It's like, I think you've priced you base I my thinking was that the market had priced in 2 years in 4 months because they're just so hungry. The market right now is just so hungry to be long. It's just
Mhm.
so hungry to finally get back to things. Can we just get over this nonsense? Either let's have the recession and get it over with, or let's get back to business. And I think the market this week has decided that let's just get back to business. The recession, maybe it comes, but we'll deal with it when it comes. But right now, let's just get back to it.
Yeah, it seems that way, and, in particular this week, I think it was yesterday that didn't the news come out that they were about to strike a deal on the debt ceiling and raising the debt ceiling, so it looked like equities kinda took off
Yeah,
on that news.
that's a tennis match, right? Monday, oh, we're close. Tuesday, no, we're not. Wednesday, oh, we're close. Thursday, no, we're not.
Yeah.
Friday, oh, we're close. But it's a 3-day weekend. So
Mhm.
Yellen has put June 5th as the end date. Run out of money June 5th, which
Yeah.
is a Sunday. So you got to sell debt on a Friday, which means you need Congress to vote on it on a Thursday. And Republicans think 72 hours for turnaround from the time the deal to read the bill to vote,
Mhm.
which means you need a deal on a Tuesday and it's a 3-day long weekend.
How could you possibly read one of these 10,000-page documents in
No one
72
reads it.
hours?
Yeah,
Yep.
no one reads it. They have to give the illusion that they read it because that's their job, right? But no,
Mhm.
nobody reads this stuff. There's been numerous instances where somebody's interviewing a politician and asking them about a particular part, and the politician relents and says, "Well, I haven't read it yet." Like they don't read this shit. They don't read it. They have their staff read it. They'll have like 10 staffers read little sections and then
Chunks.
prepare small memos, which will then go to the chief of staff. Then the chief of staff prepares a one pager, which then goes to, yeah, everything's fine. Don't worry about it kind of thing. And that's it. You can vote on this or whatever it is. So let's see what happens. But last week I said, don't expect a deal for this week coming up because the Republicans can't lose on this one. So they're not going to give up a week of campaign coverage
Yeah, and
for
I
free.
think I kind of agree with you, right? Because when something goes wrong, usually people are generally quick to get mad at whoever's viewed as the incumbent party, right? And right now, Democrats are viewed as the incumbent party. So I feel like Republicans have more leverage because if this deal doesn't get done and the economy goes into a complete fallout because we default, then people are probably going to be more likely to blame Democrats. Is that your logic?
Well, it's just what I think what resonates with people is the debt is simply too
Hmm.
high and we can't keep spending like we've been spending. And that's a
Yeah.
message that I think that everybody out there says, yeah, you're eventually going to have to come after me to pay that bill.
Hmm.
Everyone kind of agrees with that. Everyone secretly wants to receive government money, but no one openly wants to pay for anybody else receiving government money. So you can't lose with a message of this is ridiculous, 31.4 trillion, and they want to spend another 2-3 trillion dollars. This is ridiculous. We can't keep
Yeah.
spending like this. You can't lose with a message like that. So Republicans are going to use every single last minute because campaign coverage is expensive. This
Hmm.
is free. This
Yeah.
is free campaign coverage. They're not giving this up. And the Democrats are on the ropes on this one,
Yeah.
with this
Completely.
idea of we don't want to cut spending, we want to increase spending and spend more in the face of a deficit, in the face of debt, in the face of sky high interest rates based on the recent past. I don't know how you can come out of this looking like you're the champion. You got to look like it to me, no matter what party you're in, that kind of has to look irresponsible. The Republicans, I think, are doing a good job right now by not talking crazy, and they're not talking crazy. They're letting one guy do most of the talking. They're staying on point, and I think they're winning this campaign on this one. So they seem to be the party of common sense on this one because they've left the crazies out of the conversation, right? They're not going to the crazy part. And so I knew there wouldn't be a deal until the very, very last minute, not because the Republicans don't want to make a deal. They don't want
Hmm.
to default, just like the Democrats don't. They don't want to
Yeah.
default,
Nobody wants
but
that.
they're going to milk the free campaign coverage that they're getting right now for, because this is going to set up the campaign ads.
Totally.
All the Republican speaking is going to set up the campaign ads. All the Democrats saying, "Oh, we're not going to cut spending. We want to raise spending, more deficit." That's
Hmm.
going to make the campaign ads. This is input for the campaign ads right now. Republicans, I don't think, can lose this one because it is a common sense message without the craziness.
Yeah, absolutely.
Yeah.
And as far as the fallout from this, I was doing a market review, and one thing that I saw was that the 1 month Treasury rate was going pretty crazy. It rose from, I think, about 5% last month to 6.5% this month. So that's a 1.5% increase just in a single month, which is pretty historically substantial. And the rest of the Treasury curve really didn't move at all. So I was reading more into it, and I guess the logic is, the Treasury is their cash reserves are going thin because they haven't been able to raise this debt ceiling and issue more debt. So as soon as this issue gets resolved, it's going to be sort of a floodgate to issue more 1 month treasuries, that short term debt. But then that's going to be a massive liquidity drain on the economy, right? Because when the treasury issues the debt, then they take cash from the economy. So that could put further strain even on the banking system that's already had some strain. Have you been what are you thinking as far as asset classes or the banking system once this actually gets resolved?
Well, yeah, the 1 month Treasury. Uh, some of the yields were hitting over 7%. I was bidding on the June 13th maturity T bills
Hmm.
through Interactive Brokers, and I was getting some of them at 6.8, 6.85. Not a lot of volume there. I was bidding for quite a bit. I think I got about 410,000 filled, and that was about it. And that took a couple of days to get. Typically,
Yeah.
you could step in and fill, a million and a half like that. Not
Hmm.
a chance. That just wasn't there. But the yields were high. The 1 month ended on Friday at over 6%, 6.02. So when there is the debt ceiling that is being lifted, there's going to be a lot of bills issued because you gotta replenish that end of the market. Um, and you're right. If you raise the debt ceiling from 31.4 trillion to 33 trillion, then yeah, the government bond market is going to soak up 1.6 trillion dollars of liquidity somewhere. The Fed is over the rest of the year releasing 65 billion of treasuries every single month, so they're not going to be taking that. So add another, well, what, 400 billion. So you're looking at close to $2 trillion will be sucked out of the general global economy. It's not just domestic firms. The Treasury will issue money market and capital market securities. Central banks will load up more on the capital market securities. Corporations on the money market securities. But yeah, you are taking money out of the market. I don't know that that's going to push yields so significantly higher or lower. I think that there's not enough money going into the money market funds right now, or the 1 month, the 2 month, the 3 month, because corporations cash flow match. And if you're going to be late 3 days on paying me, I can't have that because I have a liability due. I have payroll to meet on this day. We have this payment to make on this day. So, they look for 1 day, 2 day, 3 day bills. It's almost non-existent now because everybody wants to get in before June 1st. They don't want anything maturing June 3rd, June 4th, June 6th, June 7th, because what if nothing happens? And then after June 15th, it settles down a bit because you have tax receipts that come in. I don't know. It's how many times do you go through this? I think what the government can do, and there's no political will for this, none at all. But what they should do is they should use an endowment or a foundation spending rule in terms of how much can you spend. Well, it's if you figure the average tax rate on GDP is, I don't know, 18%, let's say. I think that's a
Sure.
fair number to look at. That after each quarter, you have a market spending rule that says that was GDP on an annualized basis. You can now spend 18% of that on a quarter, whatever you take it annualized, bring it. That's your budget for the next
Sure.
quarter. And you have a market spending rule at 18%, which, because you look at the effective tax rate as a share of GDP, sometimes it's higher, sometimes it's lower. But if you just had a rule like that, you'd never have to do these silly debt deal fiascos because you'd never spend more than a certain percentage of GDP.
Totally. And it sounds like what you're proposing is similar to the Taylor rule for the Federal Reserve, right? Where here's the target rate that the Fed funds rate should be based on these
Yeah.
economic factors. Guess we could call this one the Meldrum rule.
Well, it's basically take the market a market rule endowment for a spending rule. They have to spend 5% of their assets, but they can adopt different types of rules. A market-based rule just says that you'll tie it to wherever market values happen to be. Well, what's the market value in the US? It's GDP. And if you have a percentage of income based on GDP, then you should set your spending based on a percentage of GDP, except for, massive infrastructure or for war. But you
Hmm.
can't keep borrowing and borrowing to pay operational costs. I mean, businesses know that's not sustainable, and that's
Totally.
what the U.S. is doing right now. Is they're borrowing. Same in Canada. They're borrowing just to meet operational costs because they keep raising what they want to pay for
Hmm.
operationally. Some things, a lot of the things that happen now is not government investment spending. It's just government expense.
Totally.
And what, maybe half of it, half the spending actually gets spent on what it's supposed to get spent on. The other half is just pure freaking waste. If you want something done as inefficiently as possible, get government to do it.
Yeah, and it's pretty insane if you look at the numbers of the US government debt. And I don't know if you've ever seen that website. It's called usdebtclock.org,
Yeah,
and it's been around
yeah.
for a long time, but
Yeah.
Yeah, if you look on there, you'll see that the debt per taxpayer in the US is $250,000
Yeah. Per.
per taxpayer, $250,000.
Yeah.
I mean,
Is it debt per taxpayer or debt per person?
so debt per citizen, I just pulled it up.
Uh,
Debt per citizen's about 95 grand, and debt per taxpayers about $250,000.
so it shows you who the taxpayer, the ratio of taxpayers to citizens. You could figure that out very quickly
Yeah,
on
about
that one, right?
40%.
But it makes sense
Yeah,
because a 6-year-old baby doesn't pay taxes, right?
yeah, and most people probably over the age of 65 don't as well.
Yeah.
Yeah, but that's a bit shocking because yeah, if you take that ratio, it should be about only 40% of the total population is paying taxes.
Yeah, I'm not going to do the math quickly, but that
Mhm.
doesn't surprise me that about 40% of the population would be taxpayers. You have a much higher proportion that are income earners, but they don't beat certain thresholds, so they end up paying no tax because they don't make more than their minimum exemption of where they would be tax free. And pensioners do pay tax because they earn interest income, dividend
Oh
income.
yeah. Yeah, so that's technically income when it's earned, especially if let's say you have a traditional 401k, you didn't pay your tax on the way in, so it,
Yeah.
it gets paid as income on the way
So
out.
when you take it out,
Yeah.
you pay tax on the way out. But there's a lot of income earners who earn below a certain threshold, so they don't pay tax.
That's interesting. I wonder what that threshold would be.
The basic personal exemption, I think, in Canada is high teens or low 20s, something like that. I think it's high teens or low 20s, somewhere around there, where you don't pay, if you're below that threshold, you don't pay tax. And even if you're above that threshold, if you're married with kids and you have, a small mortgage or a small house with a mortgage, if you have does America still have the interest tax deductibility on the mortgage?
I think so, but yeah, like we were talking about earlier, I don't pay a
Right.
mortgage, so
So you could
not sure.
get all your deductions depending on what you make and what other exemptions and deductions you have to a point where you don't pay any tax, where you get
Mhm.
most of your tax dollars back that you did pay in.
Yeah, absolutely.
Hmm.
And one thing I wanted to ask you about because as we were talking about options and stuff. So, and for those of you that don't know, it's kind of late to do, I guess, a intro. But so Mark has materials for all three levels of the CFA exam, and I used his materials for all three levels, and it helped me out a lot. But I was checking on his website that now he's got this applied series for the CFA, which is related to I think options trading. But that's one part of your package on your website I wasn't super familiar with, and maybe there's other people. So I was wondering if you could talk about that a little bit.
The applied series?
Hmm.
Yeah, it started off as just options, applied options, and then it morphed from there because I thought, well, there's a lot of other parts of the CFA curriculum that um, are textbooky. Once you read it, you think, okay, well, I get that, and if I put you in front of a screen and say, okay, well, off you go now, you wouldn't know what to do. It would be difficult.
Totally.
So if I said, buy, let's do a carry trade. Let's get some yen because that's really cheap to get, and let's buy a Mexican bond. And do you want to hedge out the currency at that point? Okay, well, we understand what a carry trade is from level 3. We understand what an intermarket carry trade is. You're using one yield curve off against another, but now actually do it. So it's the application of it that's missing. So I thought, well,
Yeah.
why not go a little bit deeper than what the book says and say, well, here's how we do these things. If you're running a portfolio, here are things that are just not mentioned.
Sure.
You've got to watch out for this. You got to be careful for that. Where does your risk lie? It lies here. It lies there. I feel that they underutilize the options as a risk management tool for your portfolio. I think they overemphasize expected return and they underemphasize volatility. And I think portfolios should be managed volatility first. Return will be what return will be. it is the most difficult thing to forecast. What is more stable is volatility. So if you look at General Motors stock, I mean, it's been all over the place. But if you look at its volatility over different periods of time, the volatility has been fairly stable. The realized volatility, even though implied volatility can move up and down, the realized volatility of returns has been fairly stable. Whether you use a 3-year look back period, 5-year, 10-year, daily, weekly, monthly, it's been fairly stable. But return, well, who knows what return is going to be? So when you start to realize that it's easier to forecast the realized volatility going forward, why not manage that? Why not manage
Hmm.
a portfolio of volatilities, and return will take care of itself? Well, the best risk management tool out there for managing that volatility is the options, because you can sell and buy only the parts of the distribution of returns that you want. So it started with that. Then it went into sector studies, and I thought, how many times am I asked, like, how do you know this, or how do you know that, or how do you get to know this? And it's just experience over time. So I thought I would, collect as much information on each of the sectors as possible.
Sure. And
I
when you're showing people how to execute these trades, is there a particular trading software that you generally recommend to people?
I use interactive brokers only because there are no limitations. It's unless it's OTC. Well, then you need a dealer, right? Um, that's assuming that you could be a decent enough counterparty as a retail investor to go OTC. But every market in the world, every exchange in the world, you have access to every asset class all on one platform. So I can do Forex. I can hold multiple currencies in the portfolio. I can do options. I can do bonds to the extent that they're listed on the platform, mostly treasuries. I can buy Japanese stocks, Mexican stocks, German stocks. I can trade futures on any exchange you want at the lowest transaction costs that you're going to get as a retail trader. Um, don't look
And
for customer service, though. That's one thing they give up
mhm.
on. Is if you got a problem with interactive brokers, you're pretty much on your own, because you call them up. The first thing they do is they place blame squarely on you, and they don't move forward until you accept that it was your fault. And then sometimes they just hang up on you once they say, "Oh, okay, so it's your fault. See you later." I mean, I'm not kidding you. It is
That's so funny.
the worst customer service.
They got a call center somewhere where they give them a script, and the whole script is just how to lecture the customer.
Yeah, yeah, yeah. Deny any responsibility. Step one. Step two, place blame firmly on the customer. Step three, hang up. That's that's the script. I can't tell you how many times you start with a problem and they just get rude with you. They basically call you stupid and dumb, and then it's like, I can't believe. But yeah, anybody listening who's been with interactive brokers, I'm sure has a customer service horror story of their own. However,
Oh,
if you can get
yeah.
past all of that, it is one platform where you can get everything done, a whole
Mhm.
portfolio all in one place. So I
Well,
use interactive brokers.
you just gave me an idea. I think, if I ever need an ego check, I'm just gonna call them up just to take me down a few notches.
Yeah, 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 yeah. So yeah, it's unfortunate, but I can't find another platform that gives me the information and the power and the resources that I have, and the customizability that I have, than interactive brokers. And I don't even use most of their features, so I haven't even begun to explore
Mhm.
all that they have to offer. But I do it through that. I introduced, and I thought, well, there's futures that can be used, and options on futures. Now, options on futures are different than options on stock, because you have to worry about, well, which underlying do you have? If I sell options on GM, I don't have to worry. The underlying is GM. But if I sell options on the S&P 500 futures, which futures contract am I selling options on? So you have to have the right underlying, and they get illiquid very quickly once you start going out more than 3-4 months at a time. Same with treasuries. You have to worry not only about the underlying, but on the underlying, what is the cheapest to deliver? What do I really have? Do I have an 8-year bond underlying the 10-year? Do I have a 7-year or a 6-year? Because the movement on the curve is going to tell me where I want to be. Do I want to be in the 5-year instead of the 10-year? Do I want to be in the 30 instead of the 10 because I need duration? I'm going to be introducing currencies as well. They're brutally difficult to forecast, but in trading them, how would you do it?
What makes them more difficult to forecast than other asset classes?
Random walk. In the long run, relative purchasing power parity seems to be about the best as a long run mean reverting level. So when they move away from the relative purchasing power parity, it could signify either a short position or a long position. But a currency can move in one direction to the point where it breaks you before it returns to relative purchasing power parity. In the short run, it's primarily driven by the expectation of interest rate and inflation differentials, more so interest rate differentials. But you take the period from 2011 to 2020, when central banks weren't doing a damn thing. Currencies were flip a coin. Who the hell knows where they're going to go next? I mean, flip a coin, because there really wasn't much other than other than potential for growth or foreign direct investment. But beyond that, it was, for the developed currencies, do you want the pound, the euro, the Canadian, the US? I don't know. Flip a coin. So they're notoriously difficult to forecast because there's no balance sheet. Trade flows don't really do very much. Capital flows matter, but if interest rate differentials are going to be unchanged for years at a time, well, at some point the currency gets to the point where the risk adjusted return is gone. So what do you do now? Right.
And
So it's
while we're on the topic of currencies, I feel like this is something people have been talking about for a while, but so with the US Treasury constantly issuing more debt, US government going into more debt, and people wonder how long can the US dollar really be stay as the world sort of standard internationally traded currency. And I don't know off the top of my head. I think it was Russia, India, a few other countries. Oh, China. Were they switching to yen as their default currency for their international trade? Um, and
hmm.
and I feel like that could we be in a period of time where the U.S. dollar is actually threatened, or is this just the news grasping for something? I think that's probably a topic a lot of people are interested in.
It's hard to forecast the end of anything. Um, until after the fact, all the markers were there. So are all the markers there today, that if this was the end, 10 years from now we could look back and say, well, duh. I mean,
Hmm.
there it was. But um the you, you know the alternatives aren't really that attractive. Number
Hmm.
one, you need a currency central banks are willing to hold, and that's the US dollar. You need a currency that's big enough that central banks will hold it. That still is the US dollar. You need a place to run to in times of crises. You're not run. When things get bad, who do you want to lend your money to? The Chinese government or the US government?
Definitely the
Or the
U.S.
Russian
government, I
government?
think.
The Japanese government? Like, where do you feel the safest lending your money? And it's usually Japan, Switzerland, or the US. Switzerland just isn't big enough to compete with the US in terms of the sheer size. Commodities are still denoted in US dollars, although I don't think that that's such a big deal. You also need a very credible central bank and a freely floating currency. So once you drop all of those, what have you got? You've got the euro. You probably don't have the Japanese yen, because are they credible at this point in time? Is it credible to have debt to GDP ratio that Japan has, inflation moving up, but still demanding a 0.25, a negative policy rate, and 0.25 on the 10-year? Like, it seems to me that they're going to have to relent on that at some point. So overall, I mean, you've got the pound, you've got the euro. The pound, I don't think, is big enough globally. The euro is probably one that can compete, but uh, it's not as cohesive as the U.S. dollar because it is a currency that attempts to be that has one monetary policy for very disparate regions, which doesn't seem to work very well. That the South and the North have very different types of influences on their economy, different types of cultures, that one monetary policy doesn't seem to make sense. Um, I don't know. Maybe somebody in Europe thinks it, no, it's perfectly fine. But it just seems to me that Greece and Italy could benefit from a different monetary policy than Germany would have. So when you look at the alternatives, you could say this person is a bad friend, but there are two other people I can choose from that are even worse, right? So until there's a viable alternative, and again, a credible central bank, a currency that's large enough, and a freely floating currency, and that's widely held by central banks. That's not China,
Yeah.
not by a country mile. Is it China? It could be the euro. That the euro in 2006, 2007, 2008 was seen as the currency that could displace the U.S. And then it fell apart until a viable alternative emerges with a large economy. Uh,
Yeah.
hate on it all you want, but the U.S. dollar is not going anywhere.
Yeah.
And if you look at where all economic growth is born, not necessarily where it occurs, but where it's born, it's primarily the U.S. All the big technologies and global companies on the planet today, U.S.
Mhm.
I mean, a few here and there in different places. A lot of them were follow-ons of technology that began in the U.S. If we look at the internet, technology dominated by the U.S.
Totally.
and they will dominate AI
Yeah,
because
I was literally just thinking that as all these major developments in AI are coming out of the US right now, which seems like it could be the next, you know, gold rush.
yeah. Well, and if you're going to invest in it, you're going to invest in the US, which means you're going to have capital inflows.
Mhm.
Some countries don't allow a lot of capital inflow or a lot of capital outflow into their markets. Again, that
Mhm.
would disqualify them for being a reserve currency. So in the end, everything is cyclical. Look at your own life. It's cyclical. Events cluster. Have you ever noticed that when you're having a bad week, everything seems to not work out. It
Yeah.
all just kind of clusters together, and then when things are going good, everything seems to be going good. You have those, and then you have long periods of time where it's random, and then all
Mhm.
the shit happens or all the good stuff happens. Well, those are cycles, right? And an economy has these long cycles as
Mhm.
well, and this could be just one psychological cycle where we look at the U.S. dollar and say, "Oh, this can't be sustained." But what if, what if GDP growth in the U.S. really accelerated because of AI over the next 10 years and was up 30%?
Yeah.
And debt only increased by 2% a year. Suddenly, your debt is perfectly manageable. Again, if your tax haul is like 18% of GDP and you can get GDP increase, your tax revenues are going to increase if you could just keep your debt growing at a slower rate than GDP. That's all you need to get your debt to GDP ratio better, is to have your GDP growing at a faster rate than your debt. So the US, I think, is in that bottom part of the cycle where you look at them and you say, well, all the bad stuff is happening to you at the same time. Well, hang on. It's find me an alternative.
Yeah, yeah, and it feels like AI really could be a turning point and something that just massively increases the productivity of the economy in general.
Well, that's
And
it. It could, right?
yeah.
It has the promise
Yeah, that's what
to. It's not
yeah,
there. It's not there today. but it
Yeah,
has
not yet.
the promise to really do a lot of that stuff.
Although,
But
and
there
one
is
thing that kind of makes me think it's going in that direction is, so just a few months ago we had, GPT 3.5, which was, the version of ChatGPT at that time, and then they came out with GPT 4 thereafter, which was 10 times more powerful than the previous version. And it was crazy because I was using GPT 3.5 quite a bit, and it really couldn't solve many of my problems. It was just so flawed and inaccurate. I think I even have a video on my channel where I was just testing out ChatGPT for finance, and I was having it do things like I've got cash flows and column A in Excel, and I want to get the NPV of them based on the interest rate in this cell. Can you do that? And it's pretty much failing everything. Or it got a few things right, but it wasn't all that impressive. And then GPT-4 came out, and now the things that GPT-4 can solve are pretty incredible. It's still giving me inaccurate results in some instances. Like, I was using it yesterday, and I was trying to create for a client a model that needed to involve the 3-month SOFR forward rates at different points along the curve. And I wanted to use it as a sanity check of like, okay, so if I have a 3-month SOFR futures rate starting in September, what is that? And the algorithm tells me, oh, that tells you from September to December the average daily expected SOFR rate, which is just not true, right? Because it should be a compounding over the 3 months of, like, if I invested in SOFR for that period of time,
mhm.
it should give me what would be my expected future rate for that whole period compounding. And so it's still giving a lot of flaws, but I don't know when we get to 4.5 if that's 10 times more powerful than version 4,
Yeah,
you know.
it'll get better. It'll get
Mhm,
better over time.
mhm.
But will it get perfect? Right? The if we're going to um, put dollars and lives at stake on the output of it, it has to be perfect. Um, I don't think that I would invest based on it now. I've asked it
Mm,
some questions before. It doesn't do well with compound questions. So if you have a question that requires an intersection set, I want this and this. It either
mhm.
answers one part or the other. It gives you an or answer and not an and answer, which
Yeah.
is very specific. I need this and this. So you're looking at an intersection. It'll take the two sets and answer one of the questions. So it's not there yet. I have the subscription to OpenAI, which gives me their
The
beta,
4.
their latest beta, and we use it here just to ask it questions we already know the answer to.
Mhm.
Sometimes pretty good, sometimes not so much. So that's one issue it has, is that you have to be able to trust the answer, and you can't. It's not
Yep.
accurate in its answer. Sometimes it just is completely wrong in its answer.
I hate how confident it answers you when it's wrong. It'll say, "This is the answer to your question," and you're
Yeah.
reading it like you can copy and paste its answer and say, "This doesn't seem true. Is this true?" And then it'll be like, "No, sorry, that was wrong."
Yeah. So an algorithm doesn't have the ability to say I think.
Yeah.
So it will come across as a factual answer to a question because it
Mhm.
doesn't say I'm pretty sure it's this. It would be nice if it had a probability saying, okay, this is 87% probability of a correct answer, because that's what the deep learning put out. And it came out and said,
Mhm.
I feel pretty certain that this is the answer, although I'm about 10% uncertain. Well,
Now,
okay, I got some kind of,
yeah.
if we had the probability of its correct answer, I think that might be a little bit more informative. But 87% right on a human life, is this cancer or not, is not good
Yeah,
enough. It's not good enough, right?
totally.
So
Now
the
that's a
other,
feature. That is a good idea. Tell me how confident you are,
yeah,
because
yeah,
it answers every question as if it's 100% certain every
yeah,
time.
yeah. So I think that that's a bit of an issue there. Is it doesn't have any nuance in its commitment to its answer, and there are times where you can take chunks of its answer and Google it, and you could find it word for word off another site. So it's
Yeah,
a heavy in plagiarizing as well, and
that's what
that's an issue in some of the video and audio.
Mhm.
and graphic generative AIs that are out there is the infringement on copyright. So
Totally.
it's got this huge promise right now, which will attract investment, but it's not ready for prime time.
And we both make content, and I also wonder about that myself. Is like when people go to ChatGPT, could it just be stealing stuff that I've put out in my own content to answer their questions, and then I'm not really getting any credit for that, or you know?
Yeah, yeah. So, well, it needs inputs to learn. So, if your stuff is out there and it's on the hit list of stuff that will help me make decisions, then it'll be included in what it needs to learn. I think it doesn't have subscriptions, so if it's behind a paywall, it doesn't have access to any information there. But any publicly facing information it
Hmm.
has access to. It can scrape all of Twitter, all of Reddit, all of whatever's available on YouTube. It can scrape that.
Hmm. Yeah, I could get the actual transcripts because YouTube auto translates the videos when you put them in there.
Not perfectly though, right?
Hmm.
So
Yeah.
that's the problem, is that it can't recognize a mistake in the input. It just
Hmm.
takes the word as given. So it just sort of takes the data that it gets at face value and determines whether or not something is predictive based on sizes of based on a whole bunch of different parameters and relationships.
Yeah. So
But it'll get
mhm,
better. I mean, the initial internet sucked,
totally.
right? But it'll get better.
So I have an idea about where I think we might be heading for the short term future. So and you can kind of compare this to chess because right for a long time no one could beat, or a computer couldn't beat the best chess player. And then I think it was maybe 1997 when IBM came up with a computer that could top the best chess player. But then after 1997, at a certain point, they started pairing humans with AI algorithms, like the chess algorithms. And so the human would work with the chess algorithm. So before it did a move, it could kind of put it into the algorithm and get some feedback about what the human might be missing. And then there was an extremely long period of time, and I think maybe this still applies to today, but they would call these like centaur teams, like a human and a computer, and they would wipe the floor with humans or computers. So the human with the computer could beat the computer, right? And I feel like that's probably where we're heading in a lot of like white collar industries, at least in the time being, especially in
So yeah,
finance.
so augmenting experience and expertise, and
Yeah.
just doing a whole bunch of the legwork very quickly. No,
Hmm.
I think you're right. I mean, I could have an assistant compile some data for me. I have to trust that assistant, much like I have to trust the AI. But when the data is compiled, it's easier for me to fact check it to make sure it's right than it is to compile it myself. I can
Hmm.
fact check it in 15 minutes, but it might take 2 days to compile. So if I can have AI do it and then a human verify it saying, okay, yeah, that makes sense, then you're right. So more as an augmentation as opposed to a replacement. I think you're right. I think
Hmm.
for more deterministic outcomes, AI will be very good.
Hmm.
Probabilistic outcomes, yeah, I think that, or strategic outcomes, yeah, I think that augmenting a human, as you just mentioned, probably is the pathway that it's going on. So
Hmm.
something deterministic would be where an outcome is what the outcome is. So reading text and creating a word cloud. I think you could pretty much rely on AI to do something like that, and then just looking at it after. There's nothing probabilistic in that. I think that text recognition is as perfect as it's going to be with AI.
Hmm.
Handwriting even is there for the most part. Speech recognition is there. So those sorts of things. If you Adobe has this commercial on Bloomberg now, where they show a biker on a street and then they trace something out and it says add yellow lines and Adobe Photoshop automatically adds the yellow line. Well, that's a very deterministic outcome. It's not probabilistic in the sense that these kind of look like yellow lines. It'll draw
Hmm.
yellow lines in around all the other pixels that have specific, very definite colors that can be measured, right? You can have a picture and you can outline something in a corner and say, can you extend this picture? And it'll just fill in. It'll say, okay, well, this looks like this horizon's dropping, this mountain's rising, and it'll continue on with that. That's a deterministic outcome that 20 years ago in Photoshop might have taken you 2 weeks to do it yourself. You can do it now in a few seconds. But it probably couldn't have generated the original picture to begin with, right?
Yeah.
Or make the determination that you wanted this extended, or that you wanted yellow lines, or that you wanted something else. So that's where I think it has a huge amount of power, is that the person that's editing that picture now could probably do something in 6 hours that might have taken them 4 days to do.
Yeah. It's
Yeah,
crazy how much you can reduce the required amount of time to perform a task now with this technology.
yeah. So an example of where we used it here is, we had some level 3 seminars that were beginning, and we had to write an email or create an email, the original email that was going to go out to the participants. So my assistant just used, I don't want to say assistant because it sounds like she's just assisting me. She's training to be me. So I'll call her my
Oh,
apprentice, is used our chat GPT subscription, put in the inputs, write me
mhm.
an email that says this, this, and this. And it wrote an email.
Yeah.
So
It's
that might have taken 15 minutes to draft an email was done in 3 minutes,
and you
let's say.
know it's not gonna mess up the grammar
Yeah.
too. You
And
don't
all you
even
had to
really
do
have
is
to
go
spell
through it
check it.
and correct certain sentences and say, well, let's add this or that. But
Yeah.
the first draft, which was 15 minutes maybe, was done in three.
Yeah, it's amazing. And
Yeah.
I'll use it for writing emails a lot now. But one thing I feel like you do need to go in and change a few things, or it looks like you're a robot writing emails to people, because it's going to write the same tone as everybody else.
You can tell it less formal, more friendly,
Yeah,
less friendly,
yeah, I love that.
more angry, a
Mhm.
little perturbed, and it will write in those contexts.
I was talking to somebody who told me a pretty cool potential features. He was like, "I wish that it could read all of my, say like the previous 100 emails I wrote, and then figure out how I write, and then reply to people for me in my own tone."
Yeah. Yeah. I hear my I hear my phone ringing in the other room. It's okay.
Oh,
It's usually scams or
yeah.
collection agencies for people who don't exist. I keep getting a call for Madonna Blanchard from a collection agency, and I've given up saying there is no such person. 5 years now. It's
Now you
going on
just
5 years.
now you're just gonna answer, "Hello, this is Madonna
This
speaking."
is Madonna Blanchard. Go fuck yourself. I'm not paying you. Take me to court. Yeah, I really mess up. Well, I don't think I can mess up Madonna Blanchard's life. I think she's done that on her own. But
Yeah, with the number of calls that
yeah,
she's getting.
yeah, 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 yeah.
Yeah, sometimes you wonder how people live. Like I get mail every day from collection agencies from the person who lived in my unit before me, and I'm just like, man, this guy doesn't even know that he's getting these letters.
Oh, I'm sure he knows.
Oh yeah, yeah. I
I'm
mean,
sure. I'm sure he knows. It's just being that he's not receiving them, out of sight, out of mind.
you
But
probably
I'm
didn't
I'm I'm
want to.
pretty sure he knows his credit rating sucks.
Oh yeah, yeah. He's
Yeah,
got a negative FICO score at this point.
negative, if that's even possible, right? If you have a name, don't you at least have some positive score?
So that was interesting that you said you've got someone you're training to kind of take over for you. Is that public information already?
Yeah, I've mentioned it a few
Mhm.
times. Is I had. It's not that I was looking for anybody in particular. It's just when somebody comes along that is outstanding,
Mhm.
you hate to see them just go past when they have so much potential. So she is a University of Toronto graduate, and U of T in Canada is one of the better schools.
Yeah, is that
Fluent.
top 2 with Waterloo?
It depends on what you're going for, right? I mean, Waterloo is big in math and computer science. You're not going to touch that.
Okay.
As far as Law schools, go York is the best. Engineering, you're probably at UBC or McGill. MBAs, you're at Western or U of T. It depends on what it is that you're looking for. I think for psychology, U of T is one of the top ones in Canada. So speaks the three biggest languages in the world, which is Mandarin, Chinese, French, and English, fluently.
Oh,
Fluently.
so could you guys potentially have your material in Mandarin?
Our download is in for the applied series. There's an informational download. It is in French, in Mandarin, and in English.
Wow.
She is going through the content for level 1 CFA now, and she'll go through 2 and 3. And because she does it 8 hours a day,
Hmm.
I'm showing her how to trade different securities, and she's building a portfolio. It's a paper portfolio, but we're
Hmm.
we're getting aggressive in there in terms of the things that we're doing, so she can watch how it behaves, and she picks up things very quickly. But she's not there yet. But in 3 or 4 years, she'll be a very good me 20 years ago.
That's awesome.
All
And
right,
did you have
so
like a interview process where you interviewed a bunch of people, or you just kind of stumbled
no,
across like the
no, no.
perfect
You
person?
you you can a good miner can spot a gold nugget among all the fool's gold, right?
Yeah.
There's a distinct look and feel for it. So it's just a matter of finding the right character,
Mhm.
right person behind the resume. And people are uh, well, what's a good way to word this? They everybody is a bundle of potential. Whether they reach that potential or not has a lot to do, I'd say a lot to do with the choices they make, but also a lot to do with who allows them the opportunity to be who they want to be. You can tell if you give me somebody who has ability, and I can tell that they've made the right choices, then fine, right? Many people never realize their potential because their own decisions get in the way. That you have somebody who has the potential to be great, but for some reason spends 6 hours a day on Netflix. Well, that potential will be squandered easily. And there are people out there that I think they know they're bright. They were a good student. They know they're bright, but for some reason just can't get anything going, and have fallen into a state of what's called learned helplessness, where nothing's worked out in the past. So what's the point of even trying? And and
Hmm.
and, and they do nothing, and they never realize their potential. And so, who's going to open the door for that? Right? But if you
Yeah.
have somebody who has a bunch of accomplishments behind them, you can look at them and say, well, I know you've made the right decisions. Now you just need an environment to grow in. So it's a matter of finding, you come across somebody who's made the right decisions, who is not a victim of their free choice, but
Hmm.
has become a victor because of their free choices. Well, then great. Here's
Yeah.
a ladder.
Absolutely.
So, and when you don't have to police them,
Yeah.
and they go beyond what they're supposed, what you're expecting, they go beyond. Then you can sort of invest in that asset, because that now is going to be an asset, not an expense on my income statement, but an
Hmm.
asset on my balance sheet, because it is going at some point, the value that's provided exceeds the cost that's going out. But most people you hire in the beginning uh, use more resources than they provide.
Totally.
That's normal. That's normal. So you
Hmm.
can't judge them by how fast they hit the ground running. You have to judge them by the decisions that they make during the course of a day, and the decisions that got them to where they are. And at some point in the future, there is that break even point where the person is now providing as much resources as they're taking, and then you have your return on investment, like you would in any investment that you make. It's kind of like a J curve, right? Well, employees
Absolutely.
have that J curve return. First few years, you are investing in an asset that you hope is not going to walk across the street and reprice themselves.
Totally.
I mean,
Yeah.
that's you could be training somebody for your neighbor,
And that's
you
the
know?
way that the job market seems really set up now. Is it's
Yeah.
like if you want to get paid the most amount of money, you're incentivized to reprice yourself every 2 years.
Yeah. Well, if it's money that you're chasing, right?
Yep.
If it's meaning that you're chasing, then probably
Mhm.
you're willing to stay somewhere where there's more meaning. It doesn't necessarily have to be about money.
Yeah.
You could use this example that if you're going to work in finance, you can get hired by one of the big banks, let's say J.P. Morgan, or Warren Buffett will hire you to work in his office for a year, but at half the price.
I pick option B, Warren Buffett.
There you go, right? Because of the opportunity for you to grow and learn in that environment. It's going to be bigger right away. It's going to be bigger. So, just with that example alone, money is not everything. You have
Totally.
to look at, well, what opportunity am I providing for you to learn? How much more will you grow with me than with someone else?
And has your apprentice filmed any lecture videos or anything that are available on your website or YouTube yet?
Not yet, not yet,
Okay.
because not there yet.
Yeah.
But has done some work already on. Well, I don't know if you've seen my videos with the new intro with the logo, the M that builds, and then she did
Yeah,
that.
yeah, I think I saw. Oh, that
Yeah.
really?
She is a wicked artist too. You should see some of her artwork. It is absolutely incredible. Like some of the drawings look like real life. So we used to in our paid version of CFA at the end of some videos have little cartoons with a guy named Rodney who was he was an angel, but just not a very well kept angel, and he'd tell stupid jokes. I mean, really stupid jokes.
Like dad jokes.
Yeah, and then that just sort of went away because we lost the person who was doing that. Well, she's doing it, and because of her artistic skills, she's doing it even better. So we have Adobe Animate, and we're going to reintroduce Rodney. And because we're an equal opportunity employer, we also have Rodnet, which is a female angel. And then they're just going to tell jokes to each other, and they don't like each other, which will become clear when they start telling jokes.
I
So we're
gotta
going to
check that out.
reintroduce those little comics, those little 20-minute, 30-minute things into the videos. It's just kind of those little Easter eggs at the end of a video that you find like, what the hell is this?
That's
That
awesome.
sort of breaks up the learning.
And I'm sure you guys can you see like how on YouTube you see the retention metrics like this percentage of people watched here versus here like are people watching those comics at like the same rate as the
Well,
normal lecture
they're
material?
not on YouTube yet.
Okay.
And we're not going to release them on.
Mhm.
They're just going to be part of our videos that we do.
On the website. Yeah, no, I was actually wondering about on the website if you've seen the retention yet. Like are people sticking around for them or
I don't know.
yeah.
We don't track a lot of information. We don't track a
Okay.
lot of data, and originally that was intentional. Is when you're setting up a website, is, well, what information do we want to track? And I thought, well, what are we tracking information for? Why are we even
Mhm.
going to bother tracking information? Uh, uh, you know, I think all we need is a username and a password, and off you go. We
Yeah.
wanted to make it as simple as possible. So we gave up a pretty big opportunity to track a whole bunch of information. Um, but I don't know that it's like, as far as how much of the video you watch, how long do you stay on the site for?
Mhm.
Are you a 5-minute person? Are you a 3-hour person? Do you prefer studying Sunday nights instead of Wednesday mornings? To me, that seemed like, what am I going to do with that information? So
Yeah,
it wasn't so much that we wanted to avoid any privacy issues. It's just track it for what purpose. These are all, anybody who's signing up for the CFA right away probably scores high on need for achievement. I
for
think we
sure.
know that because you don't have to do this. And if you
Mhm.
don't have a high need for achievement, you won't. So they typically score high on need for achievement. So 80% of my motivation job is already done because you
Mhm.
have internal motivation. Most of the people who score high on need for achievement also have an internal locus of control. meaning that when they succeed, it's because they succeed, and when they fail, it's because they failed. They don't keep
Yes.
blaming the external environment. They have an internal locus of control. You put those two things together, that's self-policing. What do I need to track all this data for? So it didn't make a lot of sense. So as far as engagement, I mean, I don't know. YouTube does it for me.
Yeah.
Um, but I have a very particular channel. I don't go into the hyperbolic, market's going to crash
Yeah.
30%, buy Bitcoin, it's going to the moon, Tesla's worth five. I don't do that kind of
That
garbage.
and that feels like 90% of what I see on the in the finance YouTube related space.
And
It's
that's what
all
gets, yeah, that's what
it's
gets
all
the
the
views.
thumbnails with like flames and the guy's face is just like, and it's
Yeah.
like,
And
oh, the
yeah.
housing market's crashing.
Yeah.
Oh, I'm being
Oh,
attacked by a wild
look at
animal.
look at the friend you
And then
got
I've
there.
also, you can't see here, but I've got another one trying to get me too.
They get along?
Yeah. Well, sometimes. So the dog is a German Shepherd. So a lot of
Yes.
times she thinks she needs to herd the cat, and the cat's just trying to walk through the apartment. And
Oh,
just everywhere he tries to go, she cuts him off. Like, nope, you're not going in that direction.
oh, what a great looking dog.
Yeah.
Yeah, yeah. The internet is full of, or YouTube's full of that kind of stuff. But that's what
Hmm.
gets the views, right? Because people
Hmm.
want to be entertained. I don't really go in for that. So what I talk about in the market outlook requires a certain level of knowledge and education in terms of what all these things mean.
Totally.
That's very few people. So
Yep.
I'll never be one of those channels where a video gets 2 million views, because
No.
there simply aren't 2 million people looking to educate themselves. It's the very few. And if you look at my comment section, they're all good questions. Some of them well thought out questions.
Yeah.
That it is enjoyable to actually engage with the viewers there, because it's just all really good questions.
Totally.
So I look forward to every Wednesday. I do a Q&A video where I just scroll through the comments section. I answer them as I go along. I enjoy that. It's sometimes the questions after make me think, it's like, well, hang on a second now, like it I like that. So I don't know that I would want the 800 comments of the mindless, dumb, stupid stuff that you read in other sites, without
Absolutely.
that you can tell have no level of thinking or education behind them. It's just stuff.
It, because to attract to such a broad number of people, you really have to start at the basics of, like, you're going to have to assume that these people have never taken a single finance course, right? Because if you do, then you're already limiting the number of potential people watching this by 99% of the
Yeah.
population. So yeah, I feel like a lot of it doesn't go very deep. And it's interesting because that's how I think most of YouTube finance related videos are. Is it appeals to probably more of a larger group of individuals that aren't particularly interested in finance, or maybe they are interested but they don't really have an educational background, or etc. And sorry, my dog's coming after me again, so I just lost
Yeah,
my
yeah,
train of
that's all
thought.
right. That's all right.
Man, what was I gonna say? Let's just move on. There was one thing I wanted to ask you about, though. And feel free to pass on this question if it's not really like public information. But so with your mentor that you're sort of training, do you have any sort of timeline of when you might pass it on?
Well, I don't see myself ever ending my involvement in the finance industry. I plan to be in this industry for many, many years, but I find that some of the simpler stuff now has become extremely excruciating for me to do.
Yeah.
So 2024 launched May 16th for level 1 and level 3. And I had to do some level 1 videos about, well, 4 sections had to be redone in the modular
Hmm.
approach. And
That's it.
it was so frustrating to do, because the new version really strips out a lot of the technical stuff. I'm just going to say it, it dumbs it down a lot. Like it really dumbs it down to the point where it's not challenging at all. And when something's not challenging, it's like, I feel like I'm not adding any value, because what the hell do you need me to explain this for? It's
Yeah.
so straightforward. You don't even need me anymore.
Like you could just read the definition out of the Schweizer book or
You
whatever at
know,
that point.
yeah.
Hmm.
But from somebody who's never seen it before, it's still challenging. I
Yeah.
can't recognize it as being challenging anymore because I'm so far ahead, and
Yeah.
I dealt with, the level one when it had a lot more technical detail. Well, when you
Hmm.
strip all that out, it's like, well, okay, this is so it's she'll be, hopefully in a position to do some of that work. Now she works for me, not for Serify. So she doesn't have to do that kind of
Yeah.
stuff. But for her to be useful for me anywhere else, she has to be an expert at all of the content first. So
Totally.
I have to train her as if she was going to be doing that stuff. When I
Hmm.
say I'm training another me, it's not that I have a date that I want to exit.
Yeah.
It's just that if I do want to exit, I better have a replacement.
There's an option. Yeah.
That's it.
Totally.
You don't have options for moving on unless you have a replacement. So all good managers know that they're only as promotable as they are replaceable.
Absolutely.
If they don't train their own replacement, they can never be promoted, because somebody would say, "Well, who'll replace you?"
And you could never spend your time, like, let's say there's something else you're interested in, but you're kind of shackled to these 150 CFA chapters that you've got to constantly be updating
Yeah,
material for.
exactly, exactly.
Hmm.
So where it'll all fit in, how it'll all come together, I don't know. I mean, that's the whole point of going down a pathway, is if you don't head down that pathway, then it's closed. If you head down that pathway, you don't know where it's going to go, but it'll go somewhere, and
Yeah.
we will see.
Yeah, absolutely. I think the most interesting test will be to see how your customers or audience um, will interact with, let's say, like a new person's voice on the videos. Because I guess you really don't know until you actually start putting some of those out there and get some of the feedback from people. And there might be some people that are just like, they love Mark Meldrum.
Yeah.
But
Well, to
we'll
have
see.
I think have a female voice might appeal to some people, and
Hmm.
if we can actually have them done in Mandarin.
That'd open up a whole new demographic.
Exactly. So, it's a matter of you you have to find a mind with the ability to be great, right? And when you do, well, it's new information. They got to learn the information, but they can learn it.
Yeah.
They have the proven ability to learn. You continue on, and with me kind of like in the room all the time, it's kind of like
Hmm.
having me as a tutor, at your fingertips right then and there. The moment you have a question, you could just ask it, and I'm right
Hmm.
there.
What one thing I really wanted to ask you about is related to the lectures that you make. And so I really love making educational content. And so I like to make videos that are, about finance, and some of them overlap with CFA. And, the ones I really like making are generally like, how do you take this complex calculation and maybe implement it in, let's say, Excel or Python or something like that. But I've looked at the books and thought about, oh, what if I did a video on this or that? And a lot of it just seems like it would be so boring to make a video on. Like for example, like a global investment performance standards video, like GIPS, or like a CFA ethics video. And so I feel like when you take on that massive undertaking of making a course that covers the whole curriculum, you're signing up for 10 hours of ethics videos. So I was wondering, like, do you enjoy every part of each video you make, or there's some where you're like, "Oh man, I got to make an ethics video today."
No, I don't enjoy. There are some parts I
Yeah.
absolutely don't enjoy. The ones that I enjoy the least are purely narrative videos,
Yeah, all writing.
where it's like, look, man, you could read this on your own. There's
Mhm.
nothing to solve here. It's just a bunch of words on a page. I dislike those the most because I feel like I'm adding no value.
Yeah.
That I feel like after I'm done, you could say to yourself, well, what's the difference between me reading it and him saying what he said? I mean, it's the same thing. And I feel that the only thing I can do in situations like that is try to recall real world instances where this occurred or that occurred, and bring that in as a story, because we remember stories better than we remember lists of facts. But some things I don't enjoy. Level 3 private wealth management for the individual, I don't enjoy that at all.
Hmm.
That's a lot of relationship management in that, and I think that what is taught is doesn't go far enough for the individual, because it really is more relationship management. Because you as the point person, you're not actually doing the asset allocation. You're not actually doing the investing of the portfolio management. You're really maintaining a long-term relationship with a client, and having regular meetings and things like that. The feedback and when do you want to rebalance, like that. Those readings really bore the hell out of me, immensely. I love puzzles. I love taking something that is complex or complicated, and saying, okay, how do I get what's in my head into your head in such a way that you no longer need me? And so you have to fill in all the assumptions that you would normally make in assuming, well, you would know this and you would know that. And you have to tear down the complexity into the simplicity, and then teach that such that in learning the simplicity, you see the complexity. I can't
Hmm.
teach the complexity. Those are fun to do because you have to sometimes think for a couple of days on a problem of, okay, I'm missing a step. I need some kind of analogy in between here to get you here. How, and I love those kind of readings. I love readings that are more technical, that have more detail, that are complicated that way, where it's really not complicated. It's really simple. If you can see the structure of the
Hmm.
knowledge, it's rather simple.
Yeah, and you're
Just
reminding me of I think your level 2 derivatives videos are probably my favorite of all the ones that I came across, which I think fall under that umbrella where it's a bit complicated and then you can kind of simplify it in such a way that makes it more understandable.
Yeah, and that's it. I mean, if you can see that a derivative problem is nothing more than a time value of money problem,
Exactly.
you no longer need the formulas. You just need a timeline, and you put your dollars on the different parts of the timeline, and you move them all to one point.
Yep.
That's what the formula does. And if you can see that, then you no longer need all those silly formulas. Or if you don't know the formula, you could create it yourself by just writing it out on the
Figuring
timeline
out the cash flows and discounting them by the rate of interest.
to a common point on the timeline. Exactly. And comparing the current price to the forward price, and just
Mhm.
bring them together, and there's how you value a derivative. Plain and
Yeah.
simple. Yeah, I love readings like that. I love the more complex stuff. I love the ambiguous stuff. But when it's a reading that is primarily declarative,
Yep.
uh, and it's narrative, it's like, well, okay, you got to know this.
Mm.
But I don't know it any better than the words on the page know it, because that's really all there is. So ethics is one of those things where it's words on a page.
At that point, you're more summarizing than anything.
Yeah, you're basically saying, okay, they're going to rely on me for the study notes because I'm making the screens. So let's try to be as comprehensive and as brief, and which is a balance, right, as you possibly can. Um, but ethics is one of those where sometimes I'll read some of the cases, and I'll think, and I'm not following why this is an ethical problem here, but
Yeah.
apparently it is, so I'm going to have to accept it. But if you could, I don't know what the thinking here is of why this is an ethical problem. And here's the thing: if it were clear cut, there would be no need to have a compliance office where you had to get a judgment. Where you have to go to the compliance office and say, look, here's my problem. How do you interpret this? It wouldn't be open to interpretation, but ethics is open to interpretation. here's the principle, and the principle is now open to interpretation. So it's, it's kind of like the, well, what if it were this? What if it were that? If you ever taught a class of ethics, those questions are endless. Well, what if
Yeah.
what if it's this? And so everybody trying to find a way around the standard, right? It's like,
Yep.
well, yeah, that's the whole thing of ethics is, you bring me a real world situation and I'll give you a ruling. But I
Hmm.
can't, there is no decision tree that says if this then that, if this then that, if this then that. You tell me what happened and I'll
Hmm.
give you a ruling. So the most you can do with ethics is be familiar with the standard, but I don't know that anybody ever becomes an expert in the standards.
Yeah. And yeah, it's really subjective. And I guess the way that they control for that is they write the tests. And as long as you practice those end of chapter questions, eventually you'll get familiar enough with the type of questions they like to ask.
Yeah. That's one of the sections where I
Mhm.
say, look, it's, that I agree with statements of my job is to get you to pass this section.
Mhm.
But for the rest of the stuff, my job is to make you great at your career. And in doing that, you'll pass this exam. But I don't think that not knowing ethics is a hindrance to making you great at your career.
Mhm.
You either have it in you to be good or not,
Yeah,
period. I can make you aware of where the boundaries are, but your willingness to cross it really is a function of your character, not a function of your education.
totally.
So I don't know that you can teach
Yeah,
someone to be ethical.
yeah, right. Or it's probably more at this point, it's how they were raised for the most part or who they are. You're
Yeah.
not going to teach somebody to be ethical in their 20s or 30s or 40s.
Hmm.
Yeah. So one thing I was wondering that so we see your videos and they're like 2 hours, 3 hours long. And I know as someone who makes videos myself, it's like for every 8 minute video I put out, I might have put 2, 3, 4 hours into that actual video. I was wondering how long it actually takes you to make, let's say, a 2 or 3 hour video.
Well, it depends. If it's content related, it's usually 6 hours per hour.
Yeah.
So if you see a
That's
three
a good
hour,
ratio.
if you see a 3 hour video, it probably took me 18 hours to do. That's not counting the narration now. That's just
Oh.
all the pre work before I
Oh,
narrate. It
yeah,
might have taken me six
mhm.
hours to narrate three.
I was thinking everything included, the whole process.
No, no, that
Yeah.
is to the point of sitting down and beginning narration.
Mhm.
Some screens I narrate three, four times because I don't like what I say because I don't use a script. And
Mhm.
sometimes I follow a thought that pops into my head too far, and I have to stop and go, nope, nope, no. That's you got to do that again. I went way off script on that one.
Yeah.
So because I just talk, and I find it better if you teach conversationally as opposed to repetitively. Like if I'm just reading off the screen, and I've caught myself doing that with narrative videos where it's just words on a screen. I'm reading and then I stop and I get angry with myself because it's like, what am I doing? Like
Mhm.
any idiot can read. What am And I gotta take a break and I gotta think. I gotta find a way to tell a story in between all the facts because if it's just facts, why not put some background music on
Mhm.
and just let it play and be done with it. So it's about 6 hours for content related stuff. For the market outlook that I do, because I have very specific screens that I get through,
Mhm.
probably takes me, probably still takes about 6 hours to prepare for it. But that kind of doesn't get the point. I don't know what my theme is on Monday for the weekend coming up. Only the week will tell me what it is. And it's things that happen during the week that then populate what I'm going to do on the weekend. So it really is significantly more hours than six because it's everything that happened during the course of the week. This past week, there's only two stories, it's the Fed and it's AI. And I don't know which one is going to win.
Yeah.
Will the Fed bring the market down or will AI bring the market up?
Mhm.
I say toss a coin at this point. So it's I don't know. I'm at the point of maximum uncertainty where the next move could be up and it wouldn't surprise me, could be down and it wouldn't surprise me. So if I had to bet on a direction now, I would just flip a coin because I
Hmm.
really, I don't have a leaning. I don't have a
Yeah.
leaning at this point. I would just flip a coin.
And between it sounds like you really have two main jobs, and one is sort of just trading your own your own options portfolio, stock portfolio, investment portfolio in general. And the other would be keeping up with markmeldrum.com, all the content that goes up there. Is there do you prefer one or the other? Like, do you get more enjoyment out of one of those two?
Um, it depends, I guess. Some weeks, no, I think I think I'm about even on both. I'd like not to do any more level one stuff anymore. It just seems that it's overkill for me to be at level one when I could do so much more at some sections of level two and especially
Hmm.
level three. I think that you know.
I mean, that's the beauty of you having a potential apprentice is that you could pass off some of the lectures that you're not interested in
Well,
doing.
we already Serify already has another person that is doing some of the video, right? So
Hmm.
we do have somebody else at level one, and we'll be doing most of the work at level two because there's changes that need to be done at
So
level two.
Serify brought in another lecturer for your
Yeah,
study
well,
package?
this person existed at Serify before Serify bought my company, right? So one of the things that I had said when I had sold is that there were certain tasks I just didn't want to do anymore
Yeah.
because it was just taking up way too much time. And so they said, "Well, we have somebody that can take that over," and there you go. And
Okay.
you know,
So
when I
it's not the
sold,
video lectures, it's just
oh
other
no, no,
tasks.
no, there's video lecture as well.
Oh.
When I sold, I agreed to stick around for 5 years because, well, there has to be a transition period, right?
Yeah.
And during that period of time, it's important as a risk management tool to taper new voices into the videos
Mhm.
that hold as true as possible to the style that I use, which means you're not going to read off a screen. You have to narrate. You have to know script. You have to know it well enough that you can talk about it and tell a story. So we do have somebody who can do that at this point in time, and we'll see how things go from year to year.
Yeah. And that'd be interesting. Did they just kind of assign that person to you, or did you have any, say
Well,
in the process?
the person's not assigned to me. Like
Hmm.
Serify owns markmeldrum.com. I don't work for Serify, so they have their own people, and they'll continue the handoff of the content to their own people over
Hmm.
time. I'm a independent contractor that has a specific contract and certain deliverables every year that I have to deliver for another 4 more years. So my voice will eventually taper out of level one, but not out of the CFA content. I'm overkill at level one, really, and especially over the last 5 or 6 years, the level one content, if you compare 2024 level one against, let's say, 2016 level one, uh, the 2016 level one is significantly more challenging
So they're
than,
just substantially dumbing down at least level one. Well,
yes.
then, so if they keep the complexity and difficulty the same at level two and level three, are we just going to see some massive fall in the pass rates on level two and level three because they're letting in more people that wouldn't normally get there?
Well, I think their logic is this, is that the majority of people come to level one with a finance or business school background. And a
Yeah.
lot of things in level one are repeat of what you saw in your undergrad.
Yeah, totally.
So let's just scale it down to the things that you need to know for level two and three without all of the other detail.
Hmm.
And then they have these prerequisite readings. So there's all the prerequisite readings for quant, for fixed income, which are last year's full readings. And the current content is a subset of that reading. So if you already had a background in quant, then you don't need all the prereqs. You
Mhm.
just need
That
here's the
one
details you
section.
need to know, and that's as far as you need to know. But if you have no background in it, it suddenly becomes very challenging because it's such a small subset without all the rest of the context to explain why things are the way they are.
And people probably aren't spending too much time reading those prerequisites. Like, I'd imagine most people probably just jump right into the curriculum.
Yeah, we have the prereq readings in video anyway. So if you can either go to the 2024 content or use the prerequisite videos,
Yeah. Well, and
which have more detail.
I'm putting my tinfoil hat on now, but I'm thinking if I was the CFA Institute and I could get more people into level 2, then I can have a better cash flow engine because, like, once you're into level 2, you're probably more likely to stick around and keep taking tests if you fail. I think a lot of people that fail at level 1, they probably just say, "All right, this isn't for me."
I sort of think it should be the other way around. That if you're not going to make it, let's find out really early. I think
Yeah.
the bar should have been significantly raised at level one. If you get past level one, then you're pretty certain to get past two and three. But to
Yeah.
lower the bar at level one just to get you further down the hallway, thinking that you won't turn back now, I think that's not the result of education. That's the result of marketing.
You're going to
That's
yeah.
not an education strategy. It might be a marketing strategy, but it's not an education strategy. I don't know that if I were in charge, I would have agreed to something like that. We're just presupposing with your tinfoil hat on that let's presuppose that that's a strategy. It would have been a strategy that I would have shut down right away, saying if why waste their time? If this is not for them, let's find out right away. Let's
Yeah.
find out in the first exam.
I agree with you because I've met people. I just talked to somebody last week who was on his fourth attempt on level 2, and it's you feel bad because think about how much time this person has spent just failing exams. Like, just let him know at level 1 that this might not be for
Yeah,
him.
yeah,
Yeah.
yeah. It's the progression through one, two, and three really follows Bloom's taxonomy quite well. Level one really is, if you look at Bloom's taxonomy, is like the first three levels of learning. Level two is like moves up to the fourth level of learning, but level three really hangs out at level 4, 5, and 6. So the strategy you use to get past level one might work at level two, but will not work at level three.
Oh yeah.
So that's why I don't use the word, I failed level three. I don't like the word fail. Well, you didn't fail level three, you just didn't pass.
Yeah.
Now, that kind of sounds like it's just semantics, right? That I'm just trying to be nicer with the words. But most likely, what you did was you went in to write a level one exam at level three. And
Prepared the same way.
that's why you did not pass. But you would have passed if it was written like a level one exam. So
Exactly.
you didn't fail. You know the stuff. You just didn't learn it at the level that you were being tested at. That's all. So it's not a fail. It's just a did not pass, a DNP.
Yeah, totally.
Yeah.
And yeah, to your point, I had to use a different strategy on each level that I took at the CFA exams. And yeah, level 1 just it felt like if you had a bachelor's in finance, you hardly need to study at all. That was my takeaway because I took it back in 2017 and I was like an idiot in terms of the preparation because I was in grad school and then I only had like 2 weeks after I graduated for the test and took it out. I only studied for 2 weeks and it was kind of fine, did just fine. But then on level 2 it was like, "Oh my god, this is an entirely different animal." But and what one strategy, and if anybody's interested who's taken the test, is I found flashcards to be extremely useful. Like the way I would actually study is I would watch your lectures and I would also read the Schweizer summary books and I would basically make a flashcard of each thing. Like let's say it's a certain kind of swap. I would like write down kind of the formula you had on the screen and then write down the type of swap it was on the other side of the flashcard. And then I would just kind of go walk around and go through like a stack of 100 on a walk, and just doing that rogue kind of like memorization really made everything so easy on exam day. I guess that's called active recall, and it's one of the best ways to like lock things into your long-term memory.
Hmm. Well, the whole point of learning is
Mhm.
repetition. Repetition. If you repeat it enough times, if you go over it enough times, it'll stay with you. So one of the things in my videos that one of the criticisms I've gotten in the past is you repeat things too much. Like what? Well, like this and this and this and this, and it's like,
Well, there's a
and
reason.
do you get it now?
Yeah.
You've been able to recall all the things I've repeated. Do you get it now? That's part of what that's part of a teacher strategy. As a teacher,
Hmm.
a good one will repeat, will come back to the themes again and again and repeat because you might not have heard it the first time.
There's
All right.
almost no way to remember something that you've only heard a single time, a month in the past.
Yeah.
If you ask me to recall something that someone said to me a month ago, exactly how they said it, there's probably no way I would accurately recall that.
Yeah, and we're not very good at remembering lists of facts. We're like if I asked you to think back to high school and think about any textbook you had and repeat, tell me some of the things that were in that textbook, you probably couldn't even remember what the chapters were. But can you remember a Shakespeare play that you read?
Yeah, or the big details. Yeah.
Because you remember stories. We are
Hmm.
set up to remember stories better than we are lists of facts. So that's what I try to do with these readings that have facts and that are purely narrative is I think, well, what's the story that I have? And I always do every screen of what's my story here. I can't just say this rate went this way, that rate went this way. Here's what this person said. Let's move on. There's you have to have a story behind it. Otherwise, we don't remember these things.
Yeah, absolutely. And I think that was one thing that really would stick out in your content when you had a s- and you could reiterate, well, here's a time in when I was actually trading that this occurred.
Hmm.
And then it's like it makes it more real.
Yeah, yeah,
And to your point earlier when we were talking about you can see my cat's ears probably
yeah.
sticking.
I know. It's actually an interesting offsetting color. It's this vibrant orange that's showing up against your black shirt. It kind of looks really neat.
Yeah, he likes to when I'm in work meetings and stuff, he just likes to make himself the star of the show.
Well, that's cats. Cats
Yeah.
will do that. Yeah.
But yeah, so the applicability of the CFA, we were talking about it earlier. Like a lot of the stuff, it's like you're going to be working on this in a particular software. You're going to be working on it on a screen, and then the way that you're studying it is typically through a pen and pad and a calculator from like the 1980s. And it's so funny because if you try to apply almost anything that you learned from textbooks in the CFA, you're going to realize that you have a textbook understanding and really no sort of applicable understanding.
Yeah, the 2024 they're going a little further out in
The
doing
skills
the
modules.
yeah, the practical
Hmm.
skills modules. You have one for Python and one for financial modeling, which
Yeah.
I think is a good thing to include. Now it's not testable, but you do have to do one of them in order to get your results.
The thing that I wasn't certain about when I read through that was, is this going to be something that also has like a 40% pass rate like the test does? Or is this just I show up on this day and I sit there for 8 hours and I like act interested or not, don't even act interested and I get the credit?
Well, no, it's you do it online.
Oh, it's online.
Yeah, it's
Okay.
online, and you go through it. You complete it, and as long as you complete it, that's all they care about. You've completed it, and you have to complete at least one of them. I don't know why you
Hmm.
wouldn't do both. I don't know why you'd just do one and just say, well, I just want to get by. If you're just
Yeah.
trying to get by, do something else. This
Hmm.
is not an industry to just get by. You will cycle through and be spit out the bottom of the industry if your goal is to get by, because no one will keep you on. No
Yeah.
one will keep you on. You will end up at Starbucks anyways. So why spend the
Mhm.
time and the money? Go directly to
Yeah.
Starbucks.
I mean, so I really like the idea of the skills modules because at the end of the day, we're all going to have to be applying these things after we get the CFA. But what is weird to me is sort of a participation aspect to the CFA exams. Like I always think of the CFA exams as something that derives its value from just being so hard to achieve. So to add something in that's just like, yeah, you just do this thing and you like check the boxes and you're past that part. It feels like it should be something that's difficult, just like the tests are.
It could be a precursor to being included into the exam. I mean, it
Mm,
would be this is CFA is not a coding course,
yep.
right? So, but is coding important to know? Probably, because Python can help get a lot of things for you off the internet. You could write some code to search Twitter for certain keywords, and to take all of those tweets and compile them in a word cloud for you. Python can do that kind of thing for you. Uh, so knowing how to do it, I think, is a good start. Not becoming an expert, but knowing how to do it then makes you a good consumer of it, right? So, if you're going to buy a particular type of electronic equipment, you don't have to know how to build it, but you really should know something about what you're buying to become a good consumer of what you're about to buy. So I
Hmm.
think that it's getting to that point. The financial modeling, well, that's really what you're going to do. I think in time the exam will probably evolve such that it will include Excel, or
Yeah.
your question will have a small plug-in Excel grid where you have to forecast revenues for a certain amount of time
Hmm.
based on certain assumptions that you will have to do. I think it'll evolve to do more of that.
And I mean, think about if the exam did evolve that way, you would be training people who would be extremely prepared for the workforce.
Yeah,
Because the
yeah,
right now, I think the CFA exam is training extremely smart academic people. Like if you can get through all three levels of the CFA exam, we know you're really smart and we know you're really textbook smart. You can understand theoretical things and you can solve equations on paper with a pen and a 1980s calculator. But realistically, as an employee in the workforce, like you're going to be working in Excel for most likely or Python. Oh, and this is kind of interesting. I put a survey on my channel a few weeks ago that said, what software do you work in the most at work? And, most of the people who watch my channel are probably preparing for the CFA or kind of in this world. And I think more than 90% said Excel was the
yeah.
number one software they work with. It was the most overwhelming majority I've seen of any of the surveys I've put out. But yeah, it just goes to show like this is what everybody's being asked to do. Like it might make a lot of sense if there's a component of the exam where you have to solve some of these things in Excel.
Yeah, so the Excel commands, like in Quant, the Excel commands are
Hmm.
are in the curriculum now. Python code is in the curriculum.
Hmm.
So to calculate the mean of something, here's the code snippet that would do it: the arithmetic mean, the geometric mean,
Uh
the
huh.
variance. So they give snippets of the code. It's in the curriculum, and it's showing up in there now, but it's not testable stuff. That in time it will be. um, you know uh, as far as how to apply all of this stuff, there is a division of labor here. Is the CFA is saying we are the repository of the knowledge, but the application, that's your 3-year apprenticeship of wherever you happen to be working. I mean, somebody has to do the other side of the job. We'll do this side and fill you with the information and the knowledge you need, but the experience you got to get from these guys over
Hmm.
here. And it's a partnership, right? So we can't, I think, hold CFAI's feet to the fire by saying, "Oh, you ill prepare me for the real world." It's like,
Hmm.
well, that's what the 3-year requirement is for. Keep in mind, when you pass level 3, you've only passed 3 exams. You don't have the charter till you have 3 years of work experience. That is the application part. That is a requirement that hasn't gone away. So in
Mhm.
essence, it's still in that respect, as far as being having the ability to apply stuff. Those 3 years should have done it for you.
And that makes sense when you put it into that context.
Yeah. So they're just saying, look, we'll do our part and fill your head up with all of this stuff, but you got to do your part and get 3 years of work experience. We're not going to do that for you. So I don't know that it is their responsibility so much
Mhm.
to apply most of it. So any application that they're doing, I think, is a good step.
Yeah,
Is
it's a
interesting.
nice step. Th
Yeah. So now when you combine that with, if you have a subscription on our site, if you have the level 1 plus or the level 2 plus or the level 3 plus, which means it comes bundled with the applied series, August 15th or in around August 15th starts the portfolio construction applied module. So if you're at level 1, you're going to see Python, you're going to see financial modeling with CFA, and you're going to see how you build and maintain a portfolio from scratch. How would you start?
Mhm.
Well, you start with your screens. What screens do you need? You need treasuries, you need forex, you need commodities, you need energy, you need your stock watch list, you need your key markers. So let's set
Mhm.
up our trading platform first so that we have our information coming in. Then you make decisions. Well, what allocation to equities, what allocation to fixed income? How are we going to get these allocations? How are we going to get this exposure? And fixed income, are we going to be high on duration? Do we have a cash rate? What's our forecast for where the central bank is going? If rates are going up, let's have some cash allocation and some duration. If rates are going down, let's get out of cash and move. So you have those capital market forecasts that will come in. So it's a lot of all of the thinking brought down into, every week we introduce one little extra bit of incremental difficulty so
Mhm.
that in 6 months' time, you're running a balanced portfolio. You know where your rebalancing points are. And hopefully, we will be able to break most retail traders of the terrible, terrible habit of their hands on the keyboard. Get your hands off the freaking keyboard. Once your position is on, get away from it. Let it work. Retail traders overtrade by a country mile. They
Yeah.
overtrade and they underperform as a group all the time.
And
They
I think
overtrade and
that's because
underperform.
when you're watching so closely and you're acting more on impulse, right? You're more likely to uh, buy high and sell low, right? Because you see something that's losing money and you get scared and sell, or you see something that's going up and you think, oh, it's going to keep going up.
Well, when your face is in the screen all the time, um, you're confusing noise for signal. And you think that there's some information in the day-to-day random movement of a stock price. And if you step back for a whole week, you'd find that there's no information in that day-to-day stuff at all, but there is
Mm-hmm.
more information in the week to week. So it's a good day typically is a day where you don't touch the keyboard because
Mm-hmm.
everything was working,
Yeah,
right? Everything was
absolutely.
working. There was no need to touch you should only be touching the keyboard when you rebalance. And you're rebalancing because you're moving out of something and adding in something new. But this idea of move in, move out, move in, move out, buy, sell, try to time the market, this technical trading that you do, and this intraday. I don't know that anybody outperforms when they do that kind of stuff. I think that most retail traders would find that they could double their performance on a monthly basis or an annual basis by doing 90% fewer trades.
Yeah. And think about it. You're working more hours to get less money. When else in life would you ever do that?
Yeah. Just because you're doing something doesn't mean it's working, right? That investing is, I think I made this comment the other day on a live feed and somebody answered in the comment section that because there was something about a portfolio is like something, the less you touch it or something. And they gave me the answer. A portfolio is like a bar of soap. The more you touch it, the smaller it gets.
Yeah.
Yeah,
That's
and
a good
it's
one.
true. It's true that when you move from day trading, to longer term buy and holds. After you do your analysis and you let things work, you'll find that your performance is night and day. But how do you know what to do? This is all part of building that portfolio, having your rules, and knowing when to rebalance. And you only step in and trade when you hit a rebalancing target. And when you
Mm-hmm.
hit that target, you know exactly what you're going to rebalance to, and that's it. And that's risk management. And if you run a portfolio with risk management, return will naturally just show up. It'll
Mm-hmm.
just show up. Now you look at the S&P, it's up what, almost 11%. Nasdaq's up 32% this year. I'm up more than the S&P, but I have not beat the Nasdaq because I really stick very closely to the S&P 500 stocks. I'm not a
Mm-hmm.
technology investor, although there are times where I think I should be. But in what I've been able to do, I've been able to beat where the S&P is so far year to date. It's not difficult if you know how to manage risk. If you chase return, that can be very hard to do. Although the Nasdaq up 32% pisses me off. I didn't
Yeah.
in my managed money, my externally managed money, I have exposure to some of those names. So I'm grateful for that. So it's not as if I'm not participating. I am just not as, you look at NASDAQ up 32, it's like, God damn it. I completely miss that.
Yeah. With the benefit of hindsight, but
Oh, well, what are you going to do? But the home builders, I did phenomenal in the home builders. The miners
yeah.
haven't taken off yet, but I think they will. But the home builders, I think, have done incredible. So not every pitch will be a home run.
I got really lucky with the home builders because in back in 2020, right towards the start of the pandemic, I got my annual bonus for the year. And I have a friend who worked at a macro hedge fund in New York. And I asked him like, "Hey, if you just got your bonus, what would you put it in?" And at that time, he told me home builders. People are going to be moving. There's going to be a lot of demand for houses. People moving out of the city, and I just pretty much took my whole bonus, and that logic made sense to me. Put it into home builders, and it went up like 100% in a year.
Yeah, nice. That's why you're looking to buy a house now.
Yeah, I guess so.
Yeah. Good, good.
So most people pursue the CFA credential, and they go to work in an industry or a big bank or a big financial institution. Very few people go to work as an entrepreneur, right? And that's something that you've done. That's something that I'm considering. And I think people would be interested in maybe hearing about the topic of like, how can you leverage, let's say, sort of the prestige or stature or confidence that having the CFA um, gives you by having that behind your name, and maybe leverage that to make your own business or the opportunities out there that people just really aren't taking advantage of. And I know you have some thoughts on that, right?
Yeah. So when it comes with to money and people's money, um, there's a certain level of trust that's required for people to hand over their money. And that trust can usually be embedded in a name like Goldman Sachs or JP Morgan,
Mhm.
or it's embedded in a credential, whether you're a Wharton graduate, whether you have the CFA charter, things like that. So, it has an impact on other people. The credential that you have, the school that you graduate from, the firm that you work for, the history that you've had. Even if you say, I was at Goldman Sachs for 8 years in this capacity, I have a CFA now, I'm out on my own. It adds credibility to who you are, and that's definitely required in the field of finance. The almost all finance departments at all schools train you for an institutional role in some capacity. Even the
Mhm.
CFA is very heavily institutional. That you're
Mhm.
going to go and take a job, but it doesn't really do much in terms of how you can create your own job. You don't have to be a job taker; you can be a job maker. It does provide you with a foundation of which to be your own boss, your own
Mhm.
entrepreneur, right? Anybody who starts a business is going to have to invest money in their business, and then they hope to get a return on the capital that they invested. Well, your capital is your portfolio, and it is a business like any other business. You have to have different types of products in your portfolio. You have to have those that generate the income, low margin, but generates a steady income. You've got certain specialty products, and you can create income factories in your portfolio. It's not difficult to do. That's beyond, to create an income factory beyond what dividends or interest would provide. And this is the power of options, is it allows you to do that at a very low risk, especially when you combine an allocation factory with an income factory. You can generate 22% per year with a low level of risk. I've had fantastic Sharpe ratios. Now, I know what some people out there are probably saying. If you're using options, the Sharpe ratio is not of course your Sharpe ratio is going to look great. Doesn't matter.
Hmm.
It's still a great Sharpe ratio. It still lowers my portfolio volatility and increases the return. But once you show people how to do these things, um, it is a possibility to be your own boss. Is why should I go take a job? I encourage everybody, do your tour of duty out there in the real world, but think about being your own person at some point and being your own boss. If you have a good portfolio, a good capital base, you can generate an income. Not only that, if you have the charter, you have the credential, you have that credibility, be your own fund. I mean, there's nothing wrong with that. Start attracting investment with accredited investors. There's a lot of money out there. You would not believe how much money there is out there that needs to find a home. It has to
Hmm.
perform. The idea of having 30 or 40 million dollars in a bank account is just not something that happens. Because it'll underperform life by 2 to 3% every year because of inflation. You have to perform. You have to. It has to find a home. It has to go to work. It doesn't just sit around. Now, I'm at the point where, and this is sort of a powerful position that I've gotten to, in the sense of my understanding of how to use the money that I've got, because I've been fortunate that I've had good success. Not that I didn't work for it. Now I'm
Hmm.
fortunate, not privileged. There's a difference. I'm not privileged. I'm fortunate that I've had good success. I've sold my business and did quite well. And I've always given to charity, 150, 200, 250 a year. But it's begin to weigh on me that I don't seem to be solving any problems,
Hmm.
because the charities you give to are sort of like a revolving door. It's like, as soon as you solve these people's problems, there's more people coming in,
Hmm.
and on we go. So you're always funding the problem. So I think, well, what if I invested in businesses instead of charities? Now, if I invest in a business, let's say 200,000 in a business, and it really hits, how much employment is being created?
Hmm.
What's the tax base that's being created? Again and again, you're creating an annuity of tax revenue for the government. Isn't that better for society in the long run than financing $200,000 of annual expenses for a charity that does a particular thing but never actually ever solves the problem? Do you know what I
Hmm.
mean? Like you're
Yeah.
filling a $200,000 hole once, as opposed to creating a business. And if it grows, just the tax base that it could create millions of dollars in tax revenues year after year
Yeah.
after year after year after year. So you're building these annuities.
Hmm.
Yes, you are getting something back, but you've opened the door for a group of entrepreneurs and you've created a tax base. So, I look at that and I think, well, that makes a lot more sense. I'm not alone in my thinking. Now, here's the thing. I got a 53% tax rate. I give to charity, I get topped out at 40%.
You should move to Texas.
Yeah, there's a lot of places I should move to. But a charitable donation tops me out at 40% tax savings, not
Hmm.
53%, 40%. But if I lose money by giving to a business, I get the full pot. Do you get it?
Mhm.
I get a better after tax position. Now, if I'm going to give $200,000 to charity, I've lost it. If I
Mhm.
seed a business for $200,000, maybe I lose it all. Maybe I don't. But if I lose it all, I'm in a better after tax position for losing it that way than I am for doing it this way. So, there's lots of people like me that have shifted their thinking in terms of where I can help society the best, and I think I can help it the best by contributing to the capitalist engine,
Sure. Do
as
you have any
opposed to, yeah.
specific kind of new business ventures you might go into when you've got more time on your hands?
I don't know. There are angel groups you join, and I'm in the region. I think in Toronto, there's an angel group. Niagara, there's an angel group. You join, you pay a fee per year, and then you commit to investing a certain minimum per year in businesses, and then you get deal flow by being part of these angel groups,
And do
right?
you have a lot of say in which deals they go into? Like, is there a voting
Oh yes, oh yes.
process?
No,
And
no. You
Mhm.
you attend these meetings, and then
Mhm.
you pick your own deals that you want to be in, with the understanding that you are actually going to make some investments, right?
Mhm.
If the deal flow is good, then why wouldn't you? But to get back to creating your own pathway, um, there's plenty of people with plenty of money that has to find a home. It has to find a home. That
Mhm.
if you can demonstrate a good track record, and you have some good strategies, you can build your own assets under management. You can build your own fund. You don't have to take a job. So I find that there's not enough of the entrepreneurial pathway that's being taught in finance schools for finance.
Mhm.
And I think the CFAI could do quite well if it infused some of its level 3 content, which is heavily in portfolio management, infused some of that with how would you do it for a retail sized portfolio. You're
Mhm.
not an institution with $800 million anymore. You're a retail investor with 2.5 million. Now,
Mhm.
what do? How do you size a portfolio? How do you scale it? What changes when you go down to that level? I think if they had a small little section at level 3 for that, I think it probably could, in people's mind, give them the idea that this is something that is viable. I can open a restaurant or I can open a
Mhm.
fund. It's the same thing.
I think yeah, and I think it's absolutely viable to start your own business, especially if you have the CFA. I think the tough part is that it takes a long time and there's a ton of sacrifice up front that you don't really get any sort of immediate gratification or benefit from. And that's probably what puts people off.
That is the nature of all success. That is the front end of all success. That is exactly what is required. Is Listen, when an employer hires you, as I said before, as a J curve, in the first couple of years, you're going to draw more resources than you return. Hope is down the road you return more than you draw. Well, to create your own business, yes, there's a J curve. You're going to sacrifice a lot in those first few years, but that's the price of success. And I get a little upset when people point to rich people and call them rich. No,
Mm.
no, rich is not a descriptor. Rich is an outcome. It's not a descriptor. Now, if it's like calling somebody an A student. No, no, that's what they got. They're a studious person that got A's. You see the difference? You describe them as a studious person, not an A student. An A student sounds like they just got something. They're a
Totally.
studious person and rewarded with A's. This is a rich person. I don't like the term rich person. This is a successful person. And every successful person will tell you the amount of sacrifice required to get there. The outcome is you'll have a lot of wealth. But what people don't see is the sheer sacrifice
Mhm.
of almost every part of your life that you have to make.
Oh, yeah. The
We
hours are
don't tell
crazy.
that story anymore, and I think it's an undertold story. I think we should celebrate success and not demonize success.
I
The
think,
idea of
yeah,
punishing successful people just because they sacrificed a lot, we don't see their sacrifice.
that's
You know,
exactly it. You only see the outcome of the success, which is the publicity they get, the fame they get, the how much everyone respects them, but you don't really see that there's probably a lot of 80-hour weeks where they just didn't have friends or didn't go to do anything fun, and they were working nights when everyone else was out doing more enjoyable things, working weekends,
Well,
and we
this is
don't
it,
see that.
and that's what you have to do is you
Hmm.
have to be willing to give up those things to get that outcome. An A student is an A student because of the amount of work that they put in to get there. So when we look at successful people, or when it seems these days that we judge successful people quite negatively. Oh, they're rich, tax
Hmm.
the rich, and it seems so easy to say, but what we're saying is, let's take our most successful people and treat them like shit.
Yeah, and I feel like
Yeah.
in that conversation, I'd really like to distinguish between people that are wealthy because they made something themselves. Like, let's say someone who started from, just like anybody else and worked really hard and became something successful. I think that's really awesome. And then I think where you could look at is maybe, let's say, someone who just got a trust fund, is super wealthy, and then has like no motivation and they live off the family's money or the generational wealth before. That's not as cool. But I feel like the conversation often doesn't distinguish between the two groups.
Yeah, so that's a small group because I know
Hmm.
no one like that.
Yeah.
I know a lot of successful
Hmm.
people, and I can tell you what businesses they own. I can't tell you about one single trust fund kid who's in my neighborhood.
Yeah, I don't
I
really know
can't.
many now that
So
you mention
so
it either.
can you name 10 people who are successful in the businesses they own? And can you name 10 people with trust funds? Probably not. You know what I mean?
Yeah.
Like we think, okay, yes, they exist, but hold on a second. You can easily name a lot of successful people that you probably know by name because of they own this, they own that, they
Hmm.
do this, they do that. You know these people. But yeah, there are trust fund kids, but there aren't that many of them. That's the thing, is that the majority of people who are successful have a backstory. And to ignore that backstory is to say we no longer care as a society about industriousness. We no longer care about applying yourself. We no longer care about being the best that you can be. We no longer care about that because we don't pay attention to that anymore. We will judge you by your outcomes. And if you're too successful, you will be punished. Well, they don't say so. They don't
Hmm.
call them successful people. They call them rich people. And I've really had enough of that
Yeah, it's
because I qualify as
mhm.
that. I'm in the top 0.1%. I've got a bunch of zeros behind my name, but I've sacrificed the amount of sacrifice I did to get this done. I'm telling you, it was every single day, every single minute of the day for years on end.
And you
And
started your business while you were a professor, right? So
yes,
so
no,
you're doing your job as a professor during the typical work hours, and then after that is you're making all these video lectures, and I
and
can't
four
imagine how many hours you were working a week to just get the business going in the first place.
and 4 hours a day walking a dog. You
Now
know,
that's hard labor.
so there wasn't a lot, but I I worked for it and I became successful. I
Mm.
didn't become rich. I became successful. And my success has been rewarded financially. Sometimes your success is rewarded in other ways, but it's rewarded financially. And when I hear politicians say the rich just need to pay their fair share, 53%. I think I'm well beyond my fair share here. I think 40% is a fair tax rate for success, way more than most people pay, 40%. The other 13% I call state sanctioned confiscation, punishment
Mhm.
for success. This is, it never used to be like this. It just seemed like sometime in the last 10 or 15 years, we've decided as a society that people who are just too successful
Yeah.
need to be punished. But only if you're too successful financially.
Yeah, I
You
feel
can
like
be too successful musically, and we
mhm,
don't take away your Grammys. You could be too successful in an acting capacity, and we don't take away your Oscars. You could
mhm,
be too successful in a sports capacity, and we don't start deducting home runs from your score, taking away
totally.
touchdowns. For some reason, it's just, God damn it, if you're too successful financially, we're going to call you names. We're going to punish you. We're going to teach you a lesson about how much you should. How dare you do the right thing? How dare you sacrifice? How dare you make the right decisions in life? How dare you employ those people? How dare you contribute to the tax
Mhm.
base? We'll show you a thing or two. I've had just about enough of that.
Yeah, it's an
Yeah.
easy target, right? Because if you're trying to get votes, you want to appeal to the highest number of people as possible. So if you just say, "Hey, look at the 1%," they're awful, they're bad. That's going to resonate with a large number of people because there's 99% of the people you're not ostracizing with that sort of rhetoric, right?
Yeah, and here's the thing is that probably 70% of the population work for the 1% somewhere, right?
Yeah,
Now,
the businesses that they work
think
for.
about how backwards that is. Imagine that you had to uh, invest some money. Would you ask a bunch of unsuccessful people for advice, or would you ask a bunch of successful people?
I know my answer to that
Right,
question.
right. But for some reason, when we run a country, we rely on the votes of a whole bunch of unsuccessful people. We think that if we take the successful people and demonize them, the unsuccessful ones will have a better idea of how to run a country. That's simply just not true. One of the one of the pushbacks you get when you complain about a tax rate is, oh, it's a bunch of rich people complaining about their tax rate. No, 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 no. It's a bunch of successful people all saying the same thing. Now, don't you think that we know something? If all the successful people are saying the same thing, wouldn't you listen to the
Mhm.
successful people? Wouldn't you want to listen to them? There is one thing that high tax rates do is they decrease the amount of investment.
Well,
Right away,
yeah,
we know that.
totally. And I would think if you're going to increase your tax rate,
Hey, buddy
yeah,
boy.
she's like, "You talking
Oh,
about taxes? I need to get involved."
yeah, no kidding, eh?
no,
That dog's a Republican.
yeah. I was gonna say though, if you raise the tax rate too high, right, you'll just gonna have capital flee. So
Yeah,
at a certain point, I mean, I always hear the conversation of, we need to raise taxes on the rich, raise taxes on the rich, and regardless of what my own personal opinions are on that topic, just logically, at a certain point, you're going to drive out the tax basis.
yeah.
It's going to leave.
Well, look at California and the
Yeah.
exodus out of California to Texas. And there was some talk here before the budget came
Mhm.
out a couple months ago that the liberal government would raise the top marginal tax rate from 53 to 56%. And I had said, even publicly, I had said, if they do that, I will begin the process of leaving this country. I mean, I like Canada,
What was the
but
rate
it's
that they
it's got to be
proposed?
it's got to be cost and benefit, right?
Mhm.
I mean, I'll pay 53% of my income to live here, but I won't
Mhm.
pay 56. At that
Yeah.
point, it's not worth the benefit for the cost that I have to pay. I can go to Turks and Caicos and pay 5% tax.
Yeah. And I don't know. It's a weird kind of intellectual sequence of events if you follow that logic. Like, okay, we need to raise taxes on the rich because they're not paying their fair share. Okay, so we raise to a certain point. But then other countries, or even within your country, say certain states, like you mentioned, California and Texas, are going to have lower percentage tax rates. So that money is going to flee to the place with the lower tax rate, right? And the only way you could really stop it is if you somehow lock the capital in the country or the state. Like you said, there's no way that you can take this capital out, which is kind of what they're doing in China, or you'll see that in like North Korea as well. But then if you follow that train of logic enough, eventually you're telling people like you literally can't move your money. Like your money is for the most part owned by the state regulator because you can't there's no
Mhm.
free flowing funds.
Yeah.
Yeah, which so it always ends up at a place that doesn't make all that much sense.
Yeah. So even in Canada, if I
Mhm,
moved from this province, Ontario, to
mhm,
Alberta, my tax rate would drop 5%. So I
mhm.
don't even have to leave the country. I could just leave the province, and I don't even have to liquidate assets or do very much. I simply just have to move to Calgary, set up an address there, and file my tax returns from Calgary, and I've just saved 50,000 for every million of income.
And so you could just say that your business operates out of Calgary.
I
Since
just
you're,
would no. You
if you
just
got an
move to
address.
Calgary. The mountains are there. Why
Hmm.
wouldn't I? Why wouldn't I do that? Right. So you can move there. What I think is missing is, before we start talking about uh, um, taxing the upper incomes by even more, is saying, well, hang on a second. Let's not just look at how much tax the individual pays, but how much tax base do they create? They built a business, they employ 300 people in their community. How much are those
Hmm.
people paying in tax? They all own homes. How much is the property tax base from that? That if that person left and those 300 jobs disappeared, how big a hit is that? But to continually go back, when I was a kid, I can remember the top tax rate, and I remember this, was 38%. And even growing up, the political conversation was always, we just need the rich to pay a little bit more and we can solve all these problems. And the top tax rate went from 38 to 53%. And government officials are saying, we just need the rich to pay a little bit more and we can solve all these
Hmm.
problems. Either the problems are unsolvable or government is not the solution. So no matter which way you go, higher tax rates are just never the answer. And that's not speaking from somebody who has income. That is just, I think, just for, if you go back to the Trump tax cuts, and I'm not a fan of Trump, but I'm a fan of tax cuts. Go back to the Reagan tax cuts, the Trump tax cuts. Um,
From like
Once you
2017.
had the tax cuts, unemployment dropped in all categories
Mhm.
to multi-decade lows. In
Yeah.
2018, 2019, unemployment simply just
Hmm.
dropped. The 80s was just an explosion of creativity with deregulation and lower tax rates. Look at what the 80s did. And we seem to just be have this idea that we are anathema to lower taxes for some reason. But it creates investment, which then creates jobs. It's the you know it this it it's not as if a tax cut only makes rich people richer. It makes society richer because there's more reinvestment. uh, but if I have to judge my return by my after tax return, and you're going to tax away my entire return, I think, why would I spend all that time just for you to take 90% of my income away? What's the point? Right?
Yeah. Yeah. It's steep and it's substantial. Have you given any thought to potentially moving? Are you seriously considering it?
A couple of years ago, I was considering Alberta,
Hmm.
but I didn't. I'm at the point now where there's not much holding me to where I happen to be. Now that I've
Hmm.
sold my business, the staff that I had here, and the office is shut down because everybody works remote, and it's not my staff anymore. It belongs to Serify. There
Hmm.
really is no obligation for me to be here. So if I get one more politician poking me in the chest with their bony finger, telling me that I got to pay my fair share, I'll leave. Then they won't have my gratitude any longer, right? And this is what kills me, is that the majority, 90% of the dollars that I'm taxed on are brought in from outside the country.
Oh yeah. Yeah. Most of your
I
customers
should
are
be
probably
rewarded for
from,
that because I'm actually
yeah.
making the country richer, not just circulating dollars.
What
You know,
percentage of your customers are from the US?
well, it's global, right? It's not just
Yeah.
the U.S. It's global, but
Probably a
you
lot from
know,
China too, I'd imagine.
no, actually not, because it's a closed country.
Oh.
So you don't get a lot out of China, only because so many things are shut down in China that you don't have much of a choice. We do
Hmm.
get some out of China, but not much. As big a market as it is, you would have to actually go and be in China to get it done. But you got to give away your IP. You have
Oh.
to have a Chinese partner. Um,
So you guys have kind of looked down that road and decided it wasn't worth it.
not so much that it wasn't worth it, just that it entailed some risks that as a small business, you just can't get done. So being part of a larger organization now, it's a question of whether or not Serify can get it done. But most of their other designations are very American, Series 7, things like that. Tax packages is really, a lot of that stuff is localized. It's not global. The FRM and the CFA are global,
Yeah.
but I don't know. I don't know if they have the experience and expertise to enter the Chinese market. That's not
Hmm.
a diss or anything like that. It's just you need certain expertise to enter the Chinese market. You need a partner in the Chinese market. Uh, I don't know if that exists or if
Hmm.
that's in place or what the plans are for that. It's not really anything that I really have to think about at this point. But no, China, you would think we would get a lot from there, but not really. Another market we don't get a lot from are some of the European markets, only
Hmm.
because Russia and Ukraine displaced a lot of people's plans, even
Okay.
in the neighboring countries. You can sort of put little pins on a map, and there's like this. You have a big area around Ukraine and Russia where it's just empty.
That's really interesting. So you
Yeah,
can see that on your own website's data that all those surrounding countries had a serious drop in enrollment in at least your study materials.
yeah, yeah. Well, I think overall, because if you look at registration, the number of people writing the exams for what was reported for February, significant drop in the number of people writing the. Now, mind you, we only have the February results. You don't have the whole year, but we are seeing that based on enrollment numbers, that there is a drop, there is a noticeable drop. But it's hard to pull that apart because you have so many things happening at the same time.
Totally.
You have inflation, which is raising the cost of living for everything else. Do you have room
Hmm.
for the CFA? You had King Dollar. So in other countries, the price of the CFA enrollment just went up and up and up and up because the
Sure.
dollar just kept getting stronger and stronger. You have financial markets that were cratering last year. And if you work anywhere, it's all hands on deck. No
Hmm.
one's taking any time off. And I think, with what's going on markets now, it's still not calm enough for anybody to take any time off. You have a hot job market that if you want a job, you'll get a job. If you don't
Hmm.
have one, it's time to look at your resume. It's time to look at yourself. So, given all of that, there's less interest in saying, let me do this designation.
Yeah.
And I think
Well.
it's also coming
Mhm.
at the intersection of a significant drop in the respect for formal education
Mhm.
from the younger, the 20, 21, 22-year olds today that would normally be the first in on the CFA program. I think there is becoming that formal education is really becoming challenged in justifying itself. So all of those events are combining all at one time, are intersecting all at one time. It would be surprising not to see
Yeah.
enrollments, and universities and colleges are reporting the same thing, that year over year that
Mhm.
they're seeing their enrollments drop. It's not
Yeah.
just one designation.
And I totally agree with all those factors that you just mentioned. And one that I think also probably plays a big role is the impact that COVID and the lockdowns and everything related to that had on the enrollment in the CFA and probably universities as well. Like, this is just an anecdotal example, but I was playing basketball with a guy a few weeks ago, and it just came up that he had, gotten to CFA level 2, and he said he was not going to do the CFA anymore, and the reason was because they kept rescheduling his tests during COVID, so he'd study for like 5 months. Then they'd say, "Sorry, you can't take the test. You can take it. Here's another date, 8 months in the future or something." So he'd study 4 more months, and then they'd push it off. And he got to the point where he's like, "I've literally spent like a year studying for one test that they didn't even allow me to take. I'm over this."
Yeah, yeah. I think there is a certain amount of that
Mhm.
when you lose your momentum, it's hard to get that momentum back. You just
Mhm.
you've moved beyond it at that point, and the
Yeah.
bug. is gone. That you no
Mhm.
longer feel the burn or the need to get it. I think there's a certain amount of that going on. I think the more challenging thing is the changing culture to less respect for formal education. That has been creeping in for a while. You even have some companies now saying no university degree required, just demonstrate that you know it.
Yeah.
Some government jobs in some states now have no university degree required. So, and having been inside the system for as long as I have been, I can tell you straight up, there is no need for a 4-year degree. You could without, I'd say, no loss of quality, bring that to 3 years with a 15-minute well, not a committee meeting, but a 15-minute redo. You
Mhm.
could easily bring a 4-year to a 3-year.
Yeah.
And and
Well, take
and,
out the
and so if you
first.
thought about it, you could get it to a 2.
Yeah. I mean, when I was in my bachelor's degree, I didn't take a single finance course until the 3rd year. I took almost all of them the 4th year, actually.
Yeah. Yeah. So there's a lot of stuff in year one and year two that I think you can do without. You
Mm.
want to you're heading towards finance. Please, you don't need an HR course. Okay, you don't need a science elective and a humanities elective. Let's get rid of that. You don't need a marketing course if you don't want a marketing course. So all of these things, I think we could get you to a degree in 2 years, and then you could add on certificates if you want to go another semester and take these 4
Mhm.
marketing courses, take these accounting courses. You can then add on later on, come back but for 4 years, here's some accounting, here's some economics, here's some marketing, here's some HR, here's a little bit of everything. Now you decide. No,
Mhm.
I've already decided. Give me the finance. Let me jump right into it. I think you could get in a 3-semester year, 2 years. You could get a degree with no loss of content. So
Mhm.
we're keeping students in school 2 years longer than they need to stay in school. We're teaching them stuff they don't necessarily need to know. And if we conceive of learning as a lifelong journey, why are we cramming it into 4 years? Like, let's give it a rest. So I think the generation today that is coming out of high school is beginning to recognize that it's not worth the expense. And I agree with them that spending 4 years of your life, giving up 4 years of income, and spending 4 years in a different city doesn't make a hell of a lot of sense. I agree. three
Yep.
years, okay, we're starting to get somewhere, but I say do away with the 4-year degree. This lack of respect for formal education is I think probably one of the bigger reasons for drops in enrollments now is this disillusionment with how many people have degrees and they're working at Starbucks or Walmart.
Yeah. And I mean, it's kind of absurd when you think about some of the courses that you're required to take and what they cost. Like, if I sign up for this 4-year degree, I'm going to have to take this humanities course that I'm just required to take, and I'm going to have to pay $3,000 for that course, or maybe more, depending on the school I go to, and just waste my time doing something I have no interest in and an absurd amount of money.
Yeah, yeah, exactly. So it's as I say, I think it's no wonder that we see enrollments dropping off because of that. Whether it comes back or not, I don't know. I wonder if AI has the ability to really make that more of a trend. You know what I mean? Like if you could say to AI, I have I want a career in private equity, curate for me from the internet a 6-week intensive training course. And it
Yeah.
just then curates, okay, watch this video on YouTube, do this, and it generates all of your quizzes. And I
Yeah.
wonder
Give
if
me a
it'll get to
step
that
by
point where
step.
you could just say
Mhm.
curate a course for me, and it builds the whole curriculum and course for you. I wonder if we
Mhm.
see ourselves heading towards something like that, where the gatekeepers of formal designations end up going away like dinosaurs.
And you just kind of gave me another idea, but so we see this in tech all the time now is these coding boot camps that are like, 3 months, 6 months, and they get people prepped for the specific job, let's say like an Amazon cloud engineer or something. Um, that'd be interesting if finance ever went a similar route. Like imagine a 6 month intensive boot camp that's just, 40 hours a week of classes of specifically private equity, you know.
Yeah.
But to me, finance just feels too prestige based and too subjective that I think the tech industry does a better job of everything being more based on a meritocracy. Like if you can show up to this interview and do these certain problems on a whiteboard, then you don't need the same levels of, let's say, college degrees as someone else. Whereas finance, it seems way more subjective, and they've got their target schools that they're feeding from, and they're only sticking to those. And there might be people that have who could, if you made your interview entirely technical, could outperform, let's say, someone from a target school. But at this point, they don't get the chance.
Well, I think the difference is on a whiteboard. If I say here, solve this problem, I will know the solution when you write it. There is a
Hmm.
solution, and your code will either work or it will not work. Period.
Yeah,
Right? But in finance, it's what's the central bank going to do? Well, opinions are like assholes, right? Everybody has one. Or is it
yeah.
like opinions are like noses? Sorry. You know what I mean? It's like, okay, you could probably lay out an intellectual argument of what they're going to do next, but in the end, we won't know until we actually see it. And well, some will be right, some will be wrong. Whereas with code, it's either going to work or it's not going to work.
Yeah, totally.
Oh, are
It's
you
very,
freezing up
very
there?
objective whether that algorithm works properly. But
Yeah.
I guess you could, I mean, there's ways I feel like you could do it. What if you had a whiteboard interview that was similar to like a CFA level 2 derivatives question? Like here's all these inputs, give me a stock or sorry, give me a write me the formula and then input the values that would calculate the value of this swap at a particular time or something.
Yeah, I think it's. I think you could probably design problems that are
Mhm.
doable. You have this exotic option with these payoffs. What is the payoff if the underlying ends up at this price? Well, those are hard to figure out, but if you can do it on a whiteboard, then maybe you've got it. There are, I think, many more sites to learn coding than there are to learn pricing derivatives, and learning coding is a far sexier thing to do than learning derivatives.
At this point in time,
But
yeah.
it's not that it can't be done. And I think that more and more, especially with YouTube, I don't know if you've really explored all that YouTube has to offer. You can build an entire university program just from the free courses that are sitting on
It's
YouTube.
it's pretty incredible, and I've thought about this a lot of times because when you go to a YouTube video that's educational, a lot of times you'll see content or comments that's saying, "Hey, this video taught me more in 10 minutes than I learned in a 3-hour lecture."
Mhm.
And I've been thinking about why that is, and here's my theory, right? So let's just say you're looking at learning the time value of money. You just want to know the basics of the time value of money. There's going to be probably 20,000 videos at least on YouTube trying to teach you the basics of the time value of money. So when you go to type in the time value of money, the one that's going to pop up at the top is the one that out of all 20,000 had the best performance, and it's extreme meritocracy in how it measures that. It's based on the watch time and the retention percentages. And so YouTube was able to pick from 20,000 different ones, and whoever made that video was able to curate it. They were able to sit there for 20 hours, 10 hours and put together a little 10-minute video and make it as perfect as possible. Whereas every university lecture that you go into, for example, the professor had to just go off the top of his head for 3 hours, and there's no editing, and there's no algorithm to determine out of all the 20,000 professors which one was the best, and then show you that one. So I feel like you can learn things so much more efficiently on YouTube than you can in any sort of traditional course.
Yeah, no, I've watched some things on YouTube in the philosophy realm, because I love watching those things where the person describing something describes it in a way where it was never described to me like that before. It's like, oh, okay, well, that's a different way of looking at it. Now I understand what they're trying to say over here. But you could do the whole thing on you. You could curate an entire finance curriculum on YouTube. Even on our site, under interesting courses, you'll find a whole bunch of full length courses that are offered on the internet in, heck, what have we got on there? A full statistics one, econometrics. We've got a whole bunch from, I think, a couple from Yale, from Princeton that are finance related courses, all taught in all
Mhm.
the typical university content. So, when that's available out there, you could self-educate yourself. The only thing that's missing is the signal that you provide to the marketplace that gives you credibility. You no longer have that
Absolutely.
signal, right? That's the only thing missing.
And that, unfortunately, is the most important piece of the puzzle, at least in the finance industry at this point in time.
Yeah. It's just, is it worth $100,000 in 4 years of your life?
Yeah. Well, and then also
Yeah.
you're excluding the opportunity cost that maybe you could have been making 40, 50,000 every year during that period of
Exactly.
time.
Yeah.
Hmm.
Exactly. Exactly.
Yeah. Yeah. Well,
Mhm.
man, you've given us a lot of stuff to think about.
Yeah.
Yeah.
Well, how about this? 2 hours, 44 minutes. There
Yeah.
we
And it was a
go.
good conversation the whole time, I thought.
Yeah. All right. We're at the
Absolutely.
end.
Yep. Sure thing. Yeah. You got any weekend plans?
It's 3 o'clock today, so it's pool time. The heater's
Pool
on.
time? Yep.
It's like 25 degrees here today. I got the heater on to 78, so I'm gonna, take my first dip in the pool for the season as soon as we're done here.